Good morning to everyone who's watching this session live, recorded as well as online. Welcome to CA Intermediate Advanced Accounting. I hope you people have received your books by now. And if you can observe, you got three books. Book number one, color book that you have. We call that book as the AQ book. We call that book as the AQ book. And you might have received two more books. Yeah. One book with very small index has the highest weightage, and that book is called AA book. We have another book which has a very small index. Index is about 4 or 5 lines. Should I show the book? Okay. So this book, what you see is this is your AQ book, and then the second book that you would have with you would be this book. This is AS book, accounting standard book, and you also have another book. This is going to be AA. So you have three different books. AQ book is the book that you would get every day to class. Every day when you have accounting class, we'll carry the AQ book with you. AS and AA book, I'll tell you when to get which book. You might have also got tax books along. Please keep tax books inside. We're doing accounts only today. Fine. So the AQ book teaches us the concept for every chapter, and the questions for this will be there in your AA and AS book. And the entire syllabus, which is issued by the Institute of Chartered Accountants of India for CA Intermediate, is divided into three modules. Module 1, I have given it in three color. Module 2, it's in red, and module 3 is in blue. Can we begin? Sure. Very good. Now today let's start with module 1. And CA Intermediate Advanced Accounting is going to be one paper, one among the two papers, which needs a little bit of background. The journey doesn't start from zero at CA Inter. There is a background needed of accounting from foundation or BCom or basics. Whenever needed, I'll go little out of CA Inter down to foundation or PU level and then teach. But a little bit of effort is expected from your end also. If in case you skip topics from your foundation, if in case you have come from direct entry scheme, or if in case you have scored only what is needed in your PU and degree. Okay, so when we start our syllabus of CA Intermediate Advanced Accounting, if you observe module 1, chapter 1 is Introduction to Accounting Standards. So we'll learn what is accounting standard, how does the accounting standards basically apply, and what accounting standards are relevant in CA Inter, everything here. And then third chapter is very much connected to chapter 1. Now let's say I start a very small tea shop wherein I sell cutting chai. To me, are all the accounting standards issued by ICA applicable, or only some of the standards applicable? Let's say I'm a big MNC company. To me, is all accounting standards applicable, or is there some accounting standards are not applicable? So, which rule applies to whom? Which accounting standards applies to which level of entity? That is what we'll learn in this chapter 3. Chapter 2 is slightly isolated, but chapter 1 and chapter 3 are connected. You can never start CA Intermediate Advanced Accounting journey without having good control over chapter 1 and chapter 3. So in today's day 1 of the class, we'll be actually doing chapter 1 and chapter 3. Very cute, sweet, little small chapter. But don't expect this to carry heavy weightage in the exam. But this is the base. Without understanding this, you won't be able to do any other chapters. Then after that, we'll be slowly moving on to another chapter called Framework for Preparation of Financial Statements, which is chapter. Once we do these three chapters, we're done with good base and good foundation for CA Inter. And then you must have already heard in your BCom or in your PU or in your CA foundation, few accounting standards name 1, 2, 29 is there, 30, 31, 32 is now not there. So all those standards are part of your entire syllabus. Sorry, entire standard list is part of your CA Inter syllabus. So standards have been divided. They've not been given in the order 1 to 29. It's been given like AS1, AS3, 17, 18, 20, 24 and 25 are part of module 1. These are disclosure based standards. In this, no, there is not many numbers to compute. There are, but not too many numbers. So when we're doing this module 1, 4.1 to 4.7, no, you might at a point feel like you're actually not doing accounts. Accounts means you have heavy expectation, no, full calculator sound will come, you'll write debit side, you'll write credit side, you'll write ledger, you'll write journal, you'll write narration, balance sheet will tally. In fact, you won't be doing anything of it in module 1. So module 1 acts like a proper base, which will actually give us a lot of information about disclosure. For example, AS1 will tell what and all should you tell along with accounts. When an investor comes, when the government comes, you anyways will give balance sheet and P&L account now calling financial statements. Along with an balance sheet and P&L, what else should you give to the investor is what we'll learn in chapter 1. There are certain things that you should tell in the beginning. Those things are AS1. And next, cash flow statement. Cash will come, cash will go. But how much cash has come for what reason? How much cash has gone out for what reason? Detailed analysis of cash coming in and cash going out in a company is detailedly done in cash flow statement. Do you see 4.2 accounting standard 3 cash flow statement in the index? Come slightly down. In the blue color, you would see chapter 11, unit 2, cash flow statement. Both are connected. So we'll do both of them together. We'll start with AS3, we'll finish with cash flow statement in module 3. So these two units are connected. If you want, you can draw a beautiful line from there to here, saying that both are connected and we'll be doing them together. Then come forward. Then we have AS17. 17 is another beautiful tool. I'll just run you through the entire index as to what will you be learning in which unit, and then we'll start with chapter 1. Now, should I start with chapter 1, question number 1? Come on, let's start writing first 5 minutes. Let's understand what's there in syllabus. AS17, segment reporting. See, as a business whole, you prepared a trading account, P&L account, balance sheet. In your PU, you did the same. In foundation, you did the same. In BCom, you did the same. But entire business as a whole is okay. Sometimes you need to identify the profitability for specific department or specific part of the business also. Now you must have seen the result, previously result released by the institute. They told overall pass percentage 9. It is for the entire community of students who wrote exam. And Yeshas Academy also, let's say, we'll release our result by saying out of all the students of Yeshas Academy who written the examination, this is the pass percentage. We'll give the overall pass percentage. Absolutely yes. Beyond that, should also give individual pass percentage, individual report as to individual report card of each student. Like that, for a business, you prepare one balance sheet and P&L account of the entire business as a whole, financial statements. We cut that business into small parts. For each part, we will give one report card, balance sheet and P&L. That is segment reporting. Let's say in my restaurant, I sell idli, vade, dosa. Idli, vade, dosa, coffee, tea. Together, I've given my P&L of the entire business. Now, I want to know how much profit am I making or how much sale am I making by selling idli only. I'll make one balance sheet for idli business. I'll make one balance sheet for dosa business. I'll make one balance sheet for coffee, tea business. That separate balance sheet PL, what we do is segment reporting. Another beautiful standard. We'll be doing this in the initial time. Maybe today or tomorrow we'll start with AS17. Then we'll do AS18. See what position and what time we've come to. You have relatives, you don't like them. Company also has relatives. We are not here to tell whether it likes it or not, but company has to disclose all its relatives. Who are its relatives? Is that company my relative? If it is relative, how is it relative? Is it my cousin brother, cousin sister, nephew, niece, uncle son, auntie son? All of that will be discussed in AS18. Who are all the relatives of a company? Like a family tree, we prepare one. Yeah, and we'll disclose it along with financial statements. No numbers computation in this standard again. Beautiful standard. We'll have fun doing AS18. And AS18 is very closely connected to 3 units that you have here: 21, 23, 27. You see 21, 23, 27. AS21, AS23, AS27, chapter 10. These 3 units will be done along with AS18. Whenever I do this, you remember, after this immediately we'll be starting with AS21, AS23 and AS27. They are connected. Then accounting standard 20, earnings per share. One more interesting standard, but though it is in module 1, this has some computation to be done. What exactly are we going to do in AS20 earnings per share? Let's say I am doing business. You would ask me, how's my business doing? I look at my P&L and I'll tell you, I made profit of 1 crore. Now, when I say profit of 1 crore, why am I telling it to you? This is because you are an investor in my company. You are a shareholder in my company. You tell me, is 1 crore good? Is 1 crore big or small? Big. But you won't get full 1 crore. Why? You are shareholder, but you are not the only shareholder. You are one among the many shareholders. Let's say Children's Day, we'll celebrate tomorrow. We'll get one cake. We'll get 5 kg cake. Like 5 kg cake. 5 kg cake is too much, no? But just imagine and then look back at the entire class. How many people are there in the class? There are about 200 people. 5 kgs cake means 1 kg is 1000 grams. 5 kg is 5000 grams. You won't get 5000 grams. There are 200 people in the class. Divide 5,000 by 200, everyone. First calculation on your calculator. Pray to God when you do it that all calculations in the entire journey should be right. 5,000 divided by 200. What do we get? You get 25 grams of cake. 5 kgs look so big and fascinating, no? But when you look at it in the calculator, how much of the cake do you get? 25 grams. 5,000 grams of the cake is the total profit of the company. 25 grams is the cake share that each shareholder gets. That is 5,000 grams is the net profit. 25 grams is the earnings per share. So that's what we'll learn in this chapter. Like, sir, so easy. Just take the profit, divided by number of shares, EPS is computed. No, it's going to become interesting. If you remember in your foundation, you read the topic of bonus issue, right issue, issue of shares, forfeiture of shares, all that if it happens, how to compute EPS. Some shareholders paid money, some shareholders did not pay money, some shareholders paid extra money, some debentures were converted to equity shares, some bonus shares were given, some right shares were given, some employees were given stock options. In all of these cases, how do we compute the profit that belongs to each shareholder will be computed in AS20. Then we have another beautiful standard called AS24, which is very small and not highly asked in the examination. Very, very small. If in case you are discontinuing, not the course, business. For today, you should not talk about such negative statements. You are discontinuing the business. You've been doing 10 products in your shop, but one product nobody is buying. So in your restaurant, you are selling Upitu. Upitu means Karabat. You know Upitu, Karabat? It's really nice here in Brahmin's Cafe. You should try. Chutney is so amazing that you eat more chutney and eat less upit. Let's say upit, but nobody likes upit. Do you agree with me? In your restaurant, everyone comes eat idli, everyone comes eats dosa, everyone drinks coffee, everyone drinks tea. No one is eating upit. So what do you do? Over a period of time, you decided to stop making upit. It's there on the menu. It's not there on anyone's plate. Every day you're cooking and you're serving it to dogs. So what do? You want to discontinue making Upit. So when you are able to stop manufacturing Upit now, when you prepare PL, in that PL revenue, some revenue would have come from Upit now. In the future, it will stop. So what should you do? From now only when you prepare PL, you should write two columns. One, excluding Upit. Second one, Upit. One, idli, dosa, coffee, tea, one column. Only Upit, you should show one column. Why? Now it's there. Next year, it will be not there. So if some investor wants to know how much profit will continue next year, how much profit will not continue next year, you should show items arising from discontinuing operations separately. So that's the beauty of this standard. I hope you understood. Then we have another standard called 25. Look at the name, interim financial reporting. What is interim financial reporting? Now you tell me, how often do you prepare balance sheet and P&L? Once a year. Am I right? In your class, in one class, you prepare for 6 balance sheets. That's a different story. But for one company, you usually prepare once a year. For one business entity, you do once a year. Now, after 3 months, you want to know the progress. Can you prepare balance sheet and P&L for 3 months? Yes, you can. That is interim report. Interim report. In your school, you used to write final examination. After some 6 months before Dasara holidays, they used to conduct one exam, mid-term. That is interim financial reporting. You prepare financial statements, but not for full accounting period of 12 months, but for half year, 3 months, 1 month. All of that is interim reporting. Whenever you report financial statements for a period shorter than a year, you have to apply accounting standard 25. And by this, we finish module 1. Now, going to module 2, you have two separate classifications to start with. Chapter 5, if you observe, 5 has 7 units. How many units? All the 7 units talk about assets. All the 7 units talk about, if you imagine balance sheet asset side, what items will come? Fixed assets will come, AS10 PPE. Inventory will come, stock, valuation of inventories, AS2. If you have excess money and if you have parked it in some investment, shares, debentures, bonds, all of that will come in AS13 investment. And to buy an asset, if you take loan, on that loan you have to pay interest. Now I want to buy one machinery for 10 lakh rupees. I go to bank, I take loan of 10 lakh. On that loan I pay interest. You tell me, what should you do with the interest that you pay? Interest is expense. Expense should be returned to P&L. Isn't that our usual logic? Say something, everyone. What is the entry when you pay expense? Interest account debit to bank. Then P&L account debit to interest. Cash will go out, interest will become expense in P&L. But we have the standard AS16, which will tell sometimes when you pay interest, it is not expense. It is asset. You bought asset for 10 lakh by taking loan. On the 10 lakh loan, if you pay 1 lakh interest, that 1 lakh interest, I won't write it to PL. I will add it to the 10 lakh of asset and make my asset 11 lakh. This is something that you never done, no? When to do, how to do, why to do, we'll learn in AS60. So you understood 2 is inventory, 10 is fixed assets, 13 is investment, 16 is borrowing cost. Interest sometimes will not be transferred to PL, it will be added to the asset. 19 is one of my favorites. Not every time you want the asset, you buy the asset. Sometimes you take it on lease. If I buy one machine of 10 lakh and pay full 10 lakh rupees right now, that is purchase. If I buy one machine of 10 lakh and I say I will pay 1 lakh 10,000 rupees every year for 10 years, then that asset is taken on lease. Lease is the word sale messed up a little. What is SALE? Sale. Just jumble the letters little. It look like LEASE. Lease. So it is sale only, but made it to look like lease or made it to look like slightly different. So you buy the asset today, you pay the money now, buy, sale, purchase. You buy the asset today, you pay the money little today, little after 1 year, little after 2 years, little after 3 years. That does not mean you purchase the asset in installments. When you buy the machine, will they give motor today, treadmill tomorrow, conveyor belt day after tomorrow, and finally you'll give the adapter? No, they'll give full machine today. I am paying the money in installments. In that case, how to record the asset in my balance sheet? How to charge depreciation? Because I'm not paying full money at once. How to do accounting? We'll learn in AS 19. And there are some assets which cannot be seen, which cannot be touched, which can only be felt. One of the example is goodwill. How to account for that intangible asset? Because tangible assets are easy. You can look at it and tell its value. You can look at it and tell its useful life. Intangible assets, not visible only. How can you think and tell what is the value of the asset? How to account for such intangible assets? One of the beautiful examples for intangible assets is goodwill, right? There are plenty other intangible assets. Know-how, patent, trademark, copyright, license. All of this, how to account? We'll learn in AS 26. Then we have AS28. This is what you say, elder brother of depreciation. You all must have done depreciation in your PU. You all would have done depreciation in foundation. If you did BCom also, you would have done depreciation at every chapter. When you do final accounts, you would have done depreciation. Am I right? When you did consolidation, you would have done depreciation. When you did amalgamation, you would have done depreciation. So depreciation is something none of us would have. None of us can say that we have not heard. But this is like elder brother of depreciation. Depreciation is systematic. Every year you depreciate. Impairment is sudden decrease in the value of the asset. Sudden decrease in the value of the one asset is there. It has good market value. Suddenly there is one new product that came in the market. Suddenly when new product comes in the market. For example, iPhone 16 Pro. How much Pro? How much? iPhone 16, no recent one. Sorry, iPhone, sorry, sir. iPhones, I'm Pixel user. iPhone 17 Pro, how much? 1 lakh? You have one. You know the price. You want one? You can buy one. Don't worry, very soon. Yeah, siphon Baratala, article ship. Okay, 1 lakh 20,000. 1 lakh 20,000. Let's say in some time, new iPhone will come, iPhone 18. When iPhone 18 comes, what will happen to the price of iPhone 17 in the market? It drops, no? I don't know the exact what amount will buy it. Will it drop? It will drop little. Why? Better features are available. Still, were so liquid. Better features are available in 18. Because of that, 17 price will drop. Or there is a better technology in the market. The older technology used products value will increase. Are you getting it? Or some new policy of the government has come. Because of that, manufacturing of, so let's say government announces one project. Karnataka state government will say that vehicle older than 10 years cannot be on the streets of Bangalore. Vehicle older than 10 years cannot be on the streets of Bangalore. You have an 8-year-old car, still in very good condition. Now, suddenly, if you would have sold yesterday, before DK uncle made that announcement. You might have sold that car for 15 lakh. Now, after Shiva uncle makes that announcement, what will happen? Nobody will be willing to buy your 8-year-old car. Why? It can be used only for 2 more years. So the value of that asset drop. That is impairment. You understand? Impairment is like depreciation, but it's not depreciation. It is like depreciation, but it is not elder brother. You understand? You've seen depreciation. Now I'll make you meet the elder brother impairment. Not now, slightly later in the journey, but you will have to definitely read it. Very interesting standard. You understood 28 little. Then we have AS 15. This chapter 6, no, there are two units, 6.1, 6.2. 6.1 is employee benefits, 6.2 is provision, contingent liability, and contingent assets. These two standards are liability based standards. This entire 5 is there, no, are all assets. I told you. You remember? Entire 6 is there, no. This is liability. 5 standard is chapter 5 is basically based on assets. Chapter 6 is basically based on liabilities. Two liabilities. One is employee benefits. What do you mean by employee benefits? Someone will work in your business. Someone will work in your company. You need to pay them salary. Full salary will not give them immediately. Some part of the salary you will cut and keep with you. Why? You will tell them, I will give you when you retire. I will give this to your children when you die. I will give this to you when you are in hospital. You take some money from them and keep with you. Am I right? When did the employee give service? Today. When are you giving him money? After 60 years of age. After 50 years of employment. After he dies. Or when he is sick. Till then, money is there with the company. But service is taken from the employee. Money is not given. That will turn out to be liability to the company. That will turn out to be liability to the company. How to record that liability? When will that be booked as expense? We'll learn in employee benefits. This is again a standard. This 15, this 28 are two standards which were originally not there in CA Inter, which came to CA Inter very recently, May 2024. Till then, this was part of CA final. When I wrote my exam, I read it in CA final. You, when you're reading it, you're reading it in CA Inter. If you have that uncle, auntie who's a chartered accountant who tells you, yeah, even I have done CA, don't take them very seriously, because when they read whatever they read in final, you're reading it in Inter. Whatever they read in Inter, you're reading it in foundation. Whatever they read in foundation is not even part of your syllabus. You're getting it? So the examination level is increasing. You're reading more things than what leave people were those old. What I read only, you're not reading. Like, what I read in final, you're reading in Inter. What I read in Inter, you're reading in foundation. So the game is going up. Level of the game is increasing day by day. I read single entry not for profit organization in my CA IPCC. You read it in CA foundation. I read AS 15, AS 28 along on consolidation and all in my CA final. You reading it in CA Inter. So what are we reading final? Something new. Ind AS, which I never read as part of my syllabus when I did my exam. World is changing, course is changing. So that old joke is a joke. They are teaching us yesterday's syllabus today to fight it tomorrow. How will we be able to? No. CA course is very dynamic. They are teaching tomorrow's syllabus today, so that you will survive tomorrow. So don't complain about CA course. Then come to chapter 7. Chapter 7 we have AS4, AS5 and then AS11 as well as AS22. We'll talk first about 7.1 and 7.2. These are financial statement based standards. Let's say I'm preparing balance sheet for the period starting from 1st of April 2025 to 31st of March 2026. What is my accounting year? 1st of April 2025 to 31st of March 2026. I did one transaction after 31st March. 15th of April 2026. Is the transaction happening before or after? After the balance sheet. Should I record that in this year balance sheet? I should record it in next year balance sheet. Am I right? That's what we always read, no? But there is an exception. AS4 will tell certain events will happen after balance sheet date, but still they should be recorded in the balance sheet. So interesting, no? Year starts in April 2025. Year ends in March 2026. When is the transaction happening? After March 2026, the transaction happened. So that should basically appear in next year balance sheet. But accounting standard 4 will tell, though it is happening after, record it in the previous year. When? How? Why? All of that will learn in AS4. I am not teaching you any syllabus. I am just running you through the index so that you know what exactly are we going to learn in this entire journey of advanced accounting. Then we have accounting standard 5. Accounting standard 5 is the name itself is so big. Net profit or loss for the period, prior period items, changes in accounting policies. It also has something more, changes in accounting estimates also. So what does this say? You have profit in your PL, 1 lakh. But I want you to tell me, out of that 1 lakh profit, is there any exceptional item? Is there any extraordinary item? Is there any prior period item? Disclose it separately. Disclose it separately. Let's say you are opening your breakfast box today in the break time. When you open your breakfast box, one box there is holige, upattu. One more box there is palya, like salad. One more box chapati. One more box kurma. One more box pulao. One more box dessert. One more box ice cream. Oh my God! Just imagine what your friends will feel. Is this the box this guy gets every day? They'll be very surprised. You should tell them, this is not my box every day. Yesterday we had function at our home. All the leftover food I've packed and I've got today. From tomorrow I'll also get one idli chutney. Day after tomorrow I'll get chapati. The day after that I'll get palav. I'll also get only one dish. But today, exclusively, I have so many dishes. You should tell. If not, people will make wrong assumption. What assumption will they make? They'll think that every day you will bring this much only. Am I right? So company also, when it prepares P&L, let's say in 1 year PL, they have 10 lakh rupees profit. They should tell, out of this 10 lakh rupees profit, 9 lakh rupees is lottery. It is there this year. Next year onwards, my profit will be 1 lakh only. They should disclose 10 lakh. If you say 10 lakh as profit, people will have high expectation, thinking that your profits are 10 lakh throughout. But actually, your profits will be 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh, 10 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh. It's like that over chart. Every over there was 4 runs, 5 runs, 4 runs, 5 runs, 4 runs, 5 runs, 5 runs, 4 runs, 5 runs. 1 over 16 runs. Again 4 runs, 5 runs, 4. Why? That over may 2, 3 no balls were bowled, and then one white ball went for a boundary. All of that. That's an exceptional over. You cannot keep that over as a base and then say run rate is 16. No, you should keep average, no? And you should disclose that separately. That's what we'll do in AS. Fine. We'll show what are the items in P&L which are extraordinary, which are exceptional, which might not keep repeating every year. Or 1 year, company has lost. That year may earthquake happened. Because of that, they had lost. If not for earthquake, company would have been profit. Usually, company is 5 lakh profit, 4 lakh 75 profit, 5 lakh 10 profit, 6 lakh profit, 4 lakh profit. 1 year, 10 lakh loss. Again, 5 lakh profit, 4 lakh profit, 5 lakh 50 profit. So usually it's in that 5 lakh range. 1 year it had a big dip. Why? Earthquake. You should disclose. In that year, when you prepare PL, you should tell, without earthquake, this would have been my profit. Because of earthquake, this has become loss. We'll disclose it. Beautiful standard. Accounting standard 5. Very small, but very interesting. Then we'll do accounting standard 11. The course is not just going to let you be in India. The course is also trying to tell you how to have wings and then fly, or how to have clients who are not Indian, how to have clients which are American clients, or like European clients, or like some client who's there in Arab, or some client who's there in your friendly neighbor, Sri Lanka, anywhere like that. Then how to do their accounting? Maybe if you have a branch there, your idli dosa is selling so good that you open one branch in USA, you open one branch in Belgium, you open one branch in Netherlands, you open one branch in Australia. There also there is sales, but there you won't collect money, no? You won't collect 50 rupees. You collect 1 pound, 10 dirhams, 20 baht, yen, euros, pounds. Am I right? So when you collect money in that way, you have different currency. Can you prepare one trading P&L where you write rupees also, dollars also, yen also? No. You have to write everything in rupees. Whenever you prepare ledger journal, you should write debit in rupees, credit in rupees, amount in rupees. You used to write rupees so often. No, if the transaction has happened in a foreign currency, or you have a branch in the foreign country, how do you convert it to Indian rupees to prepare balance sheet and PL? That is what we learn in AS 11. Effects of changes in foreign exchange rate, because foreign rates keeps changing. How to convert the transaction currency to Indian currency and record it in Indian books. Then we have accounting standard 22. You got one more book today along with your accounts book, tax book. Yes, tax class will start very soon, so you got tax book. In tax, you compute how much tax to pay, income tax to pay. You compute all of that. How to write accounting entry for the tax that you pay. We have one separate standard 22. In accounts, we read accounts. In accounts, we read tax. Interesting. Then 7 construction cost. This 8 is there, no? Basically 8.1, 8.2. Both of them together talk about revenue. How to recognize revenue. How to recognize sale money. When you sell goods, you receive money. How to recognize. Simple, sir. Sale entry, cash account debit to sales, Debtor account debit to sales. It is for a simple sale entry when you give entire goods once and collect entire cash once. You are a very, very rich businessman who's into construction. What are you doing? Construction business. Raghuvaran, what is it? Raghuvaran, that one Dhanush movie was there. Huh? VIP. VIP 2 also came now. That kind of a movie. You run a construction company or this typical serial, yeah. In every typical serial, the businessman will be in construction business. I don't know how and why. So you've taken one construction business. What construction do you do? You don't do construction of 3 BHK, what to say, independent house here. No, you're constructing one flyover. You're constructing one big apartment. 5 years you'll take to construct. You're constructing one dam. You're constructing one highway. It will take 5 years, 6 years to construct. No, I am government or I am an entity. I have given you a construction project. I am going to give you money, not all at once, little, little as you construct. You complete construction in 5 years. Now you started construction in 2020. You completed construction in 2025. It's a 1,000 crore project. When will you recognize 1,000 crore as income? In year 2020 or in year 2025? No, you need to recognize little, little every year. How much is that little? Sir, 20%? No. Depends upon how much construction you have done, how much income to record, how much expense to record, how much profit to record, how much asset to record, how much liability to record, how much money to receive. All that we learn in Accounting Standard 7. Accounting Standard, what does the name say? Construction. Very good. Then we have Accounting Standard 9, Revenue Recognition. What is AS9 Revenue Recognition? AS9 will tell different variety sale when to recognize revenue. Today the sale is very complicated. Back in the time, it used to be simple. You want one bed. What you used to do is to go to the shop, give the money, take the bed, come. Now, no. If you want bed, you check 3 websites and then you order on one website. There they give plenty of options. Do you want rosewood? Do you want timber? Do you want shisham wood? Do you want teak wood? In that also, you want king size, you want a queen size, you want to with headboard, you want to without headboard, you want to with storage, you want to without storage. What do you want as a topping? Plywood, engineered wood. So many options. You want a square, you want a rectangle. You'll be like, no, I want round bed. Why you've seen too many Ravichandran movies that you want round bed now? Now, when you want a bed, you go there, you pay money, you get it, sale is over, purchase is over, you will recognize. If I am the carpenter, I'll recognize the revenue. If you give a customized order and you give a little advance, when do I recognize revenue? Is it when you place the order? Is it when I manufacture the bed? Is it when I deliver the bed? Or is it when you don't have the right to return? So many things to do. Service also. Previously, people used to take the service, give the money. Now it's not like that. Service is going to be given over 2 years. They collect full money at once. If you go to dentist for, let's say that root canal now, 5 sittings, 4 sittings needed. They won't take the money per sitting. They'll say, sir, we have a package. You can pay 20,000 now and your next 5 sittings are already covered. I go to salon to get haircut. You should give a haircut. We say, okay, sir, we have a subscription model running wherein you pay 5,000 rupees and you get subscription for 6 months. In 6 months, you can take any services needed, sir. 2 times every month. I'm like, I will go get the haircut, pay the money and come. He's trying to sell me Amazon subscription. He's telling me, take 6 months subscription. 6 months, I can get haircut done, I can get facial done. He's telling me there are so many options. Head massage. I didn't know that I can get so many things done. So many things. Now, when you do that, let's say I give him 6,000 rupees for 6 months subscription. Now he receives 6,000. When should he write sale entry? First month? 6 month? When? Interesting. You should recognize it over 6 months, not all at once. How and when? We'll discuss it in Accounting Standard 9. What if tomorrow your client comes with the same thing? He says, sir, we run a salon, sir. In our salon, we don't charge the customer per setting. We take them annual subscription of 12,000 per year and they can get services done every time. Now, how to recognize the 12,000 to P&L? In which month will you rate the 12,000 in P&L? How do you decide to rate? There should be some uniform policy that we'll learn in Accounting Standard 9. Then we have Accounting Standard 12. Government is giving you grant. You're doing a very good job. So government will take money. Like you pay electricity bill, I am happy. I will give your electricity bill back to you. Take the money. Or you want to construct the factory, I will give the land free. Or you want to buy one imported machinery, I will give you 50% money, 50% money you put from your pocket. Or you are running a big capital project. You don't have money to start. Let me give you little money as capital. When government gives money to the business, Then how does the business account for that money that they receive from the government? That is what we learn in Accounting Standard 12, Government Grant. Then we have amalgamation of companies. I don't know how many of you have done it in BCom. Beautiful chapter, big chapter. There is one company, another company. They together become one big company. Till yesterday it is you and me. From tomorrow it is us. So in that case, in us, how to record? In your home there were some assets and liabilities. In my home there are some assets and liabilities. Now it will be our home. You will bring all your assets. I'll bring all my assets. We'll arrange them cleanly in the asset set. How to arrange? We will learn it in Accounting Standard 14 Amalgamation. This Accounting Standard 14 Amalgamation 9.2 you see here. If you come little down, in chapter 13 do you see amalgamation of companies? Both are connected. We'll learn them together. Previously, I told you for cash flow statement, and now I'm telling it for amalgamation. We learn these topics together. Are you getting it? Then we'll go to the next one. This 10 is there, no? 3 units. They are a single family. Consolidation for subsidiary, for associate, for joint venture. What is subsidiary? What is associate? What is joint venture? You hold 60% of the shares in my company. I'm your subsidiary. You hold 60% shares in my subsidiary. You hold 25% shares in my company. You don't have control, but you can influence. I am your associate and not your subsidiary. If in case you hold 50% and somebody else holds 50%, then I am joint venture. Are you getting it? In each of the cases, how should the holding company do the accounting for subsidiary? How should the holding company do accounting for associate? How should the holding company do accounting for joint venture? All the things are not affected. In 2020, yes, 20 came to In 2024, 2020, instead of as of business every 5 years. 19 was the first time, and 19 was the same time from where we can get 24 is the it's the same 20. Not just inter course also. Then come to module 3. Module 3 we have these units. Module 3 looks very small, no? But it actually takes a lot of time to finish module 3. Yeah, so this is like core accounting. Whatever you have expectations regarding accounting, that will be finished in this unit. That's what we'll do in this unit. But otherwise, rest of it, to some extent, you will feel like we're doing mathematics. To some extent, you feel like we're doing statistics. Some of you will feel like we're doing costing also. So you feel like it's a new subject. Accounting here, it's not only journal entry and ledger. It has so many things that is relevant upon computing the numbers and thinking. All of that will also be promoted in this syllabus. 11.1, 11.2 together is financial statements. You must have done balance sheet and P&L for sole proprietor and partnership so far. We will learn how to do it for company. Schedule 3 format. Not just balance sheet and PL, but also the cash flow statement. Then after that, we do have another chapter called buyback of securities. Buyback of securities is where it is opposite of your issue. You must have done issue of shares, no, in PU, in foundation, BCom, where the company collects the cash, gives the share. Now, ulta. Company takes the share back and gives the money to the shareholder. Company takes the share back from the shareholder and gives them cash. When the company takes the share back from the shareholder and gives him the cash, returns him the cash, that is what we call as buyback of securities. What do we call it as? Buyback of? Very nice. Then we have amalgamation of companies. I told you, know, here 9.2 AS 14 and amalgamation both are read together. Then we have reconstruction. Reconstruction is where company is there. It is not going for amalgamation. From inside only it's changing a lot of things. Within the balance sheet there are huge changes. You demolish the building, construct the new building, not reconstruction. Building is same. Kitchen you are making into hall you are making into kitchen, washroom you are converting into balcony. Outside stairs were there, now you're putting stairs inside. Exterior walls are same, but inside you're doing so many changes. You want to say there was red oxide flooring, you remove that and you put granite flooring. The ceiling was bad, now you're putting false ceiling, you're putting one chandelier. In bathroom there was one ande ole where you boil the water, now you're converting into bathtub, jacuzzi. So all of this. Now we're making this major changes within the balance sheet to make it look really, really high-fi. You call it a makeover. For example, he has long hair. Let's say tomorrow he'll go get the haircut. He'll make that fade from here, and then mullet on the top, and then he'll shave his beard, he'll change the glasses to contact lenses, and then you change that means makeover is there. No? That makeover is what we call as internal reconstruction. Same company, but different look. And throughout this process, they make one transition video. Here we'll do transition accounting. Ingittu, ingaitu. It was like this, it became like this. How in between all that process is journal entry, ledger, resolution, all that. That's our reconstruction chapter. Then we have the last chapter, which is something which would have almost got removed when the syllabus got renewed in May 2024, but survived the test of time. Branch accounting. When you have more than one place of business, when you open one branch, in that branch there are transactions. How to account for branch, how to account for head office, how to incorporate the branch transactions into head office. And we do it in two cases. One, when the branch is in India, and when the branch is outside India. You have branch in US, you have branch in Netherlands, you have branch in London, you have branch in Australia, you have branch in New Zealand. There also there is sales happening. How do you account for all transactions? Learn it in accounting standard 11 with foreign branch accounting given in branch accounting. So this is the discussion of your entire syllabus index, just to keep you aware what can you expect from each of the chapter. Did you understand little? Did it make little sense? Yes, I thought it's very important for you to know what you're going to do before you actually do it. It's not like randomly something is started, you're writing, and then when that comes, you understand. I just wanted you to be at least be little familiar with the chapter because you are doing your CA intermediate here. You have a lot of friends who are doing CA intermediate. Might not be here, might not be from me, might not be with you in this classroom. They might have been doing different chapter, you might be doing different chapter. When you sit with them and then talk, if they tell something, you cannot be like, I don't know what is it. Maybe they've not done it for us. No, that can't be the case. Should at least know a little bit about it to talk. And that's the reason why I made you walk through the entire syllabus. And this is our introduction to advanced accounting. If in case you guys have any questions to ask, you can ask. Let's begin with chapter 1, Introduction to Accounting Standards. Don't expect question in the examination. Write a short note on accounting standards. What is accounting standards? True or false on accounting standards? No, you didn't see a inter. But should we read this? We should actually. Why? If you don't know what is accounting standards, how can you ever learn AS1, AS2, AS3, AS4, AS5? No. Before discussing accounting standards, we need to make ourselves familiar with the topic called as gap. What is gap? G A A P. Oh, it's not gap, it's gap. Double A. Generally accepted accounting principles. What is it? Generally accepted accounting principles. So there are certain situations in accounting where I will say we should write like this. You will say no, 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 we should write like this. So I am saying this, you are saying that. What to follow? Both of us will fight. Let's say you will win. Whatever you tell will fall. If I will win, whatever I say will fall. That's how it used to be. Over a period of time, people decided solution to every problem is not fight. We can sit and then talk. We can sit and then discuss. We can debate without fighting. We can argue at an intellectual level, but not by holding each other's collar. So people came to one conclusion. Okay, your point is valid to this extent. My point is valid to this extent. We will start like how you told, end like how I told. Let's agree to disagree. Let this be what both of us will follow. Are you getting it? I will say coffee is the best. You're like, no, tea is the best. Both of us fight. Let's say my kingdom wins. My army is strong. Coffee will become the national drink. Let's say you win. Tea will become the national drink. We'll be like, no. Morning we'll have coffee because caffeine shot in the morning will give us good adrenaline rush and good impulsive heartbeat. In the evening, you want it to be soothing, we'll have tea in the evening. So let's agree to do that coffee in the morning, tea in the evening. So this is what we both agreed to follow. In accounts also people used to fight. They both sat down, they both agreed how to do accounting. Generally, Jana and La agreed, accepted, opkonditu to do accounting. That is generally accepted accounting policies. In the case of fight, what people agreed to do together without fighting is called gap. What I will do, what you will do, what everyone will do is gap. Are you getting it? Then yeah. In which side of the road should you drive? Right side, left side? Left side. Left side, right side. See, let's say I will say right side of the road you should go. Let's go to the time where wheel were invented and roads were just put. Harappan Mohenjo-daro civilization time. I am saying we should go on the right side of the road. You are saying we should go left side of the road. You will come from left side, I'll come from right side, both of us accident. Then both of us will sit and decide. No, let's make it a rule. Let's all of us go always on the left side of the road. We agreed on this. This became commonly accepted. There is no law, there is no government, but we mutually accepted that we should go to the left side. Do you agree with me? That is generally accepted accounting principle in accounts. Over a period of time, traffic rules came. Same thing what people were following. They wrote it in the rule book. Always stick to the left side of the road. Rule number 10 of Road Transport Act. They made one rule out of it. That becomes accounting standard. So what I am doing, you are doing, both of us agree to do is gap. Over a period of time, if it becomes a standardized paper, standardized rule book, that is accounting standards. So journey of accounting standard is first conflict, two opinions, then mutual agreement, then gap that will evolve to become accounting standard. So every accounting standard today was once a conflict. Then it is resolved by generally accepted accounting principle. Then it ended up becoming accounting standard. You understand the journey? Yes or no? In our country, in India, there are two sets of gap. How many sets of gap are there? One is accounting standard, other one is Indian accounting standards. One is accounting standard, other one is sir ಅಂದ್ರೆ first ಅಲ್ಲಿ ಇರೋದು Indian accounting standard. No, that is also in India only. That is also Indian only. But this is called as Ind AS, this is called as AS. Sir, what is the difference? The easiest difference that we can note now is AS is part of CA intermediate syllabus. Ind AS is part of CA final syllabus. But this is not the actual difference here. But this is a funny difference that we can remember. For now, for time being, what is the difference between AS and Ind AS? AS is what you learn in Inter. Ind AS is what you learn in CA final. There is actually a different difference. I'll tell that to you. Just give me a little time. And in India, we have AS and Ind AS. No. Internationally, there is something called as IFRS. What is internationally there called as? What is IFRS? International Financial Reporting Standards. These are followed only in India. If we tell our friendly neighbor, Bangladesh, you're expecting me to tell something else? No. So, if we ask our friendly neighbor to follow the accounting standards issued by ICA, will they follow? They will not follow. Like, why do we have to follow what you tell? You have ICA, we have our own institute for accounting. We will issue our own rules. We will issue our own standards. Am I right? Can our DKC uncle tell in Bangladesh, Basali, if women travel, we should give free based on Aadhaar card? They also have Aadhaar card, but leave jokes apart. Can we tell them that they'll give free transport? Who are we to make rules in their country? We cannot make rules. So their country have own government. Their country has their own accounting body. Their country has their own accounting standards. So in India, accounting standards are different. In Bangladesh, it is different. If you go little up in Afghanistan, it is different. If you go further up in Russia, it's different. If you go little that side, in Europe, it's different. In US, it's different. In Akade Godre, we'll come back this side only. Japan, it's different. And again, Russia. If we come down south, all your favorite countries, Thailand, Indonesia, Malaysia, each of them have different accounting standards. And if you go further south, Australia, different standards. Every country has different standards. So basically, everyone is doing the same, recording the same transaction in different way. So when you have to compare, in India, you have an automobile company. Let's say Tata Motors. Now it has become two companies. Let's go a little back in time. Let's say there's only one company. Hey, you know, no, Tata Motors split into two. Let's say Tata Motors is one company. You want to compare Tata Motors P&L with Tesla, or Tesla is too different to compare. Some company which is non-India, like Honda Japanese-based car manufacturing company, not Honda India, Honda Japan, or Mitsubishi, no better, Porsche. Okay, we want to compare Porsche financial statements with Tata Motors financial statements. There is little bit of difficulty in comparison. One is currency, leave currency. It's not the matter of currency. The policy for recognizing the revenue that they follow is different from the policy that we follow. Policy that they follow for recording assets is different. They follow different depreciation method. I follow different depreciation method. You can't compare. To compare, policy should be same. For example, can I say, let's say I conduct exam in the class. For half the students, I give MCQ exam. For like for 33% students, I give MCQ exam. For 33% students, I give descriptive exams. For 33% students, I'll do oral exam, Viva. And I'll give marks to all of you. Can I compare your marks? It's not fair, no. To compare the marks, exam should have been same. So now different countries has different rules. Different rules will give different profits. How can I compare profits? That's not fair, no. So what we did is globally all the countries started adopting IFRS. Every country they told, yeah, I have my own accounting standards, but I think I need to embrace the change. I need to go global. I will follow IFRS. What USA, UK, and all are following, I'll adopt the same thing. So every country started adopting IFRS. India also thought, yes, we'll also adopt IFRS. Then we understood we are very different, bro. We are not same. What did we do? We did not adopt IFRS. We did convergence with IFRS. What did we do? Convergence means what? We are taking IFRS into our country, but we are not taking it same to same. We're not taking it same to same. We're changing some cooking recipe. We're changing the presentation and then taking. For example, is pizza an Indian concept? Is pizza an Indian dish? Pizza was found in Orissa. They were serving it in the temple. No, pizza is not an Indian. It's an Italian dish. Burger is it an Indian concept? We had roti. We did not have burger. We did not have bread. It is not an Indian concept. Burger is not an Indian concept. Pasta is not an Indian concept. And then pizza is not an Indian concept. Momo is not an Indian concept. But in India today, you get hot dogs. Hot dogs. Okay. We will now, Nagesh Bhai will be so upset. Now we are adopting all of these dishes. In India, in Jayanagar, everything is available now. At a click of a button, 10 minutes, where pizza is available now. You got it? But pizza, when it came to India, burger, when it came to India, it did not come the exact way how it was served in the original place. Burger, when it was this little controversial, but just to make you understand, I'll take this example. Burger, when it is originally made and it was served, no, you know what meat does burger have? It was basically made of meat. Burger was not originally your aloo patty inside, paneer, burger was usually made of meat. India, meat is not ate by everyone. Selective part of the country eats meat, selective people in the country don't eat meat. And you can't even tell so simply. People, when they were trying to bring burger to India, they understood it. Meat culture in India is also very complicated. Usually, they used to put red meat in burger. You understand? No, red meat. Red meat is beef. Can you imagine a fast food joint in the country serving a burger or serving any non-veg food with red meat in it? No, it's a cultural shocker. Half the people in the country won't eat if it is served with red meat. And alternative, what they used to put as a second savior is pork. Now, if you serve the pork, then other half of the country doesn't eat. If you serve both beef and pork in that place, well, then nobody will go. So what did they do? When burger came to it, they understood, okay, Indians don't have any religious significance to chicken. Put chicken. Everywhere you put chicken. Everywhere you put chicken. And Indians love spicy food. Alugade, aku, heltini, peri peri, put masala. Put. Everywhere you put full spice. It's so bland. McD, if you have in Dubai or Singapore, no, it is not as spicy as the food that you get here. Mac Maharaja is available only in India. Make Maharaja, make aloo tikki, make paneer makhni, make paneer butter masala is available only in India. It's not available outside. So for Indian culture to adopt that burger, they had to redefine the way the food was served. In pizza, people used to add jalapenos, broccoli, zucchini. In India, zucchini is like sautekai. Do you add olives? No. What do you add? Paneer. You put cheese. You put tomato. You put kotomri sopu. That is Indian version of pizza. In Indian pizza, I was surprised. You have dal makhni pizza. No, some pizza with paneer. It look like one North Indian curry. Some paneer, yeah. What paneer do you get? Malai paneer, palak paneer pizza. Palak paneer pizza. This is not how the pizza was originally made. Zucchini, none of us we usually eat. So what do they put? They put slices of what do you say? Onion ಹಾಕ್ಬಿಡ್ತಾರೆ, potato ಹಾಕ್ಬಿಡ್ತಾರೆ, tomato ಹಾಕ್ಬಿಡ್ತಾರೆ, like done. ಈರುಳ್ಳಿ. If you would have been open for change, ಅದರಲ್ಲಿ ಒಗ್ಗರಣೆನೂ ಹಾಕ್ಬಿಡೋರು. ಕೊತ್ತಂಬರಿ ಸೊಪ್ಪು, ಕರಿಬೇವು, ಸಾಸಿವೆ ಬೀಜ ಹಾಕ್ಬಿಟ್ಟು, ಕಡಲೆ ಬೀಜ ಹಾಕ್ಬಿಟ್ಟು, ಒಗ್ಗರಣೆ ಹಾಕ್ಬಿಟ್ಟು ಹಿಂಗೆ ಹಾಕ್ಬಿಡೋರು ಇಂಡಿಯನ್. Leave jokes apart. So what happened? This burger and pizza, what is not a non-Indian dish, when it came to India, it had to go through some cultural change. Some items which are originally there in the dish were removed. Some items which were not originally there in the dish were added. This is the story of Indias in India. Indias is not Indian. Indias is little Indian. Indias is actually IFRS fabricated to look like Indias. We took IFRS. We removed some things what we don't like. We added some things that we like. India. What is it? We took IFRS. We removed some things what we don't like. We added some things that we like. What is it served as in India? Indies. So before Indies came, in India, what were we following? Accounting standards. Accounting. But as we go global, when we open branches across the world, when we have subsidiaries across the globe, we need to follow the standards which are globally followed. So we adopted the global accounting standards of IFRS in the Indian version, and that's nothing but Ind AS. Everybody understood Ind AS? Ind AS is Indian version of IFRS. And IFRS is also not today. IFRS is also quite old. And before IFRS came into picture, there was something called as International Accounting Standards. What was called as? What was it there? Till 31st March 2001. I think none of you are born, no? Oh my God, I'm growing old. Oh God. And I was surprised. Yesterday I had interbatch for this May attempt. And there were people who were born in 2006. What are you doing here? Don't you think you should be in school? 2006. What to class? ECA inter class they've come. In the class, are there people who were born in 2006? Oh my God. 7. Oh my God. 2008. T20 World Cup was older. IPL is older than you. You're not even IPL kid. You missed first three seasons of IPL. 2008. One. Don't tell me there is people from 2009. 2009 anyone? 10 or after? No. Okay. You are an IPL kid. When were you born? April? January. Oh, you could have watched IPL. Did you see IPL season 1? First match, Brendan McCullum, 175 runs against RCB. No. Well, I don't know if you know. First match, inauguration match, Bangalore. Rahul Dravid captain, Saurav Ganguly captain. Saurav Ganguly won the toss. He choose to bat, and Brendan McCullum ನಾಯಿ ಹೊಡೆದ. ಆವತ್ತು ಸ್ಟಾರ್ಟ್ ಆಯ್ತು RCBಗೆ ಬ್ಯಾಡ್ ಲಕ್. Finally, we got recently. Yeah. Okay. Fine. Let's come back here. So 2001, no, 31st of March, there was something called as International Accounting Standards, which was actually regulated by a committee called IASC, International Accounting Standards Committee. That body name changed to IASB. International Accounting Standard Committee became International Accounting Standard Board. International Accounting Standards became IFRS. And later we adopted it. When did we adopt? I'll tell you all that. Okay. So now, did you understand the part of this? What is AS? What is Ind AS? What is IFRS? How do we react to IFRS? All that. We have a global outset as well as the Indian outset of accounting regulations in the country. From GAAP to AS and from IFRS, sorry, from International Accounting Standards to IFRS to Ind AS. You got the whole map? Basically, what are accounting standards? This is the definition. You don't have to mug this up for exam, but you're supposed to know. What are these? These are written policy documents. These are written policy documents which are issued by any of the three bodies. Number one, government. Number two, expert accounting body. Number three, the regulatory body. So who are the three people who are empowered to issue accounting standards in India? Number one, government. Number two, very good. Number three, when we say the word government, who will issue? नरेंद्र मोदी अंकल बरतरा मित्रों मेरे प्यारे देशवासियों कल से हम सब पढ़ेंगे अकाउंटिंग स्टैंडर्ड 1 is it like that or will Amit uncle will tell come and tell you need to follow this accounting standard that accounting standard tell ya what do you mean when you say government नरेंद्र मोदी अंकल बरतरा state government is also government no ಯಾರ್ಯಾರು ಮಾತಾಡೋದು ಯಾರ್ಯಾರ ಕರ್ನಾಟಕದಲ್ಲಿ ನಾವು ಅಕೌಂಟಿಂಗ್ ಸ್ಟ್ಯಾಂಡರ್ಡ್ 4 ಫಾಲೋ ಮಾಡಬೇಕು ಏನಂತೀರಾ ಶಿವು? Will Sidramaya uncle discuss with Shivu uncle and then issue accounting standards for us to follow? Tell ya. Who will issue? MCA. What do you mean by MCA? Ministry of Corporate Affairs. The governance in our country is divided into ministries. Ministry for Human Resource, Ministry of Education, Ministry of Tourism, Ministry of Finance. Similarly, there is a ministry which talks about corporate affairs in the country. You get it? So, under this Ministry of... Okay, first, who's the Minister for Corporate Affairs? Anybody in the class? Guessing, come on. Minister for Corporate Affairs. Guess, yeah. Sir, Narendra Modi. That is Prime Minister. You open any ministry photo, you will see uncle photo only. Uncle is like uncle ke yella website Instagram hai. Tell ya. Don't know. Anybody? No. Was at one point of time. For the class to know, Piyush Goyal is a chartered accountant who's a central minister. One of the central government minister. Before that, there was one more chartered accountant who was a central government minister under India government only. Any idea? He was the minister for railways. No. Suresh Prabhu is also a chartered accountant to become a central minister. You can also become one. You become prime minister. Chartered accountant is the prime minister of the country. Wow. Okay. Done. Any other guesses? Good try. Anybody? Very famous, yeah. Really? Mm-hmm. Hey, Jaishankar uncle is external affairs. Affairs only. External. Not corporate. Asim Akram. Akram Singh. Okay, okay, nobody. Very famous. Very famous. Proper meme content. Meme number one, Narendra Modi uncle in memes. Number two, Amit Shah uncle. Number three, Nirmala Sitharaman. Srimati Nirmala Sitharaman is a minister for corporate affairs. See, Aadhaar card photo ಹಾಕಿದ್ದಾರೆ minister. ಇವರು ನೋಡಿ ಇಲ್ಲಿ. This is cheating. Yeah, ನಿನ್ photo ಮಾತ್ರ ಚೆನ್ನಾಗಿರೋದು ಹಾಕ್ಬಿಟ್ಟು ನನ್ನ photo ಮಾತ್ರ Aadhaar card photo. So, Minister for Corporate Affairs is Sri Nirmala Sitharaman. Now, under this, if you see, register your company, close your company, register your LLP, all that is there, no? E-book, name reservation, so many things are there. Here, if you come, slowly if you observe, let's see, I'll show it to you. Wait. Why did I bring you here? To show you regarding counting standards. That's what we were discussing, no? Act and rules. Do you see act and rules here, third tab? Let's say I'll click on this acts and rules. If I click on acts and rules, you have act, rules, forms, notifications, circulars. What is this? Oh, accounting standards. Who has issued this? MCA. Ministry of. Okay, if you come here, you see that. We went back. See here. Do you see accounting standards? The Indian Accounting Standards, Ind AS. I told you, no, that is there. Under section 133 of Companies Act 2013. This reference to Companies Act, you can't see. Can you see now? 133 of Companies Act reference is there. Come to your AQ book. In this book, come to the second unit. I'm going to say third chapter actually. Sorry. Third chapter. Applicability of Accounting Standards. There, do you see here? Section 133 of Companies Act. We've given reference or have we not? 2 pages later. Same reference, whatever we have given, it's there in the MCA website also. Do you get this? So they're talking about Ind AS because that's applicable for the bigger entities today. And we also have accounting standards which I'll show now. Why is it not loading? See here. Do you see accounting standards as on 1/4/2017? There is Indian accounting standards as well as accounting standards. Both are there in MCA website. Accounting standards will learn in CA, Inter. Indian accounting standards will learn in CA, final. Both are regulated and both can be issued by government. Government means MCA in this context. Okay. Now, if I click on this word accounting standards, I have the entire list. AS1, disclosure of accounting policies. Come to your index. In module 1, do you see AS1? What is the name? Disclosure of accounting policies. AS2, chapter 5, unit 1. What is the name? Valuation of inventory. Come to AS3, cash flow statement. You have it as chapter 10, unit 2. or sorry, chapter 11, unit 2, as well as you have in module 1. Same names, no? Chapter AS4, chapter 7, unit 1, contingencies and events occurring after balance sheet date. 7.2, AS5, net profit or loss for the period, prior period items and changes in accounting policies. So, whatever is your syllabus, it is not there just in your book, it is there in MCA website. This is your syllabus. If, for example, if I click on this AS1 no PDF, whatever PDF is going to open, no, all this is been covered in your book. Someday, if you are really curious and interested in reading, you can open this bare text and then read whatever is there here. See, we will have a small check. Here you see one word, fundamental accounting assumptions. Can you read it? What are the 3 points that is there? Going concern, consistency, and accrual. 3 things are there. Open your material, come to accounting standard 1, chapter 4, unit 1. You have the same thing, fundamental accounting assumptions. 3 points are there in blue color. Going concern, accrual, consistency. Is it there? Same thing what is there in the bare text has been included as a part of your material. So then we'll go little down. If you see, there are several things. Examples. These are examples for accounting policies. That's also there in your book. And consideration for selection of accounting policies. What are the 3 considerations that are there? Prudence, substance over form, materiality. See your book. What are the 3 things that we have? Considerations for selection of accounting policy. Is there? Where is it? Yeah, consideration for selecting accounting policy. Prudence, substance over form, materiality. Are the same 3 points there? Do you agree with me? So, accounting standards are issued by MCA. It's a big list, fully there. 5. And then next, if I go, you have 6. 6 is removed now. 7, 8, 9, 10, 11. And then page number 6. Usually you finish in first page or you keep going to the next pages and then see. Whenever you search for a product on Amazon, whenever you search for something like this on the website, you see. Very good. So 27, 28, this is also there. 27 is chapter 10, unit 3, joint venture. 28 is chapter 5, unit 7 or unit 6 answer. Impairment. 7 na? 7. Impairment. Contingencies. Chapter 6, unit 2. Sir, you know chapter number and unit number also. Been teaching, sir, for a little time now. So, familiar. Don't worry, you guys are in safe hands. Done. Paka. Okay, so what I'm trying to tell you is in chapter 1, when we say in introduction to accounting standards, accounting standard definition, it is a written policy documents issued by government. Government is MCA. Ministry of Corporate Affairs will issue accounting standards. There is one more entity which can issue accounting standards. What is the second line there? Expert accounting body. Who is the expert when it comes to accounting? Chartered accountant. Chartered accountant. What is the expert accounting body? Institute of Chartered Accountants of India. ICAI. Institute of Chartered Accountants of India. ICAI is the institute which regulates accounting standards in our country. Really? Yeah. We'll go to ICAI website. Have you been to ICAI website ever? Yeah. Registration madake. Okay. Usually you go to students column. No. Today we'll go to resource column. Today we'll go to, usually you go to ICAI website and you end up going to students. And then you go to BOS knowledge portal or you go to CA course or you go to SSP portal login. Am I right? Right next to students, there is one column called resources. If I click on resources, what do I have? The first step. Very good. Shall I click on accounting standards? Yeah. See here you have accounting standards. Accounting standards are there. Indian accounting standards are also there. Let's click on accounting standards. If I click, I have accounting standards as on 1st of April 2025 PDF version. Shall I open? Let's see the PDF version. See the index. What is the first item? AS1, disclosure of accounting policies. What is there in the MCA website? AS1. What is AS1 here? What is AS1 here? Disclosure of accounting policies. AS2, valuation of inventories. What is it here? AS2, AS3, cash flow statement. MCA website, AS3 cash flow statement. ICAI also AS3 cash flow statement. It is the same. Actually, there are 2 different bodies. They have the power to issue two different set of accounting standards. But thankfully, same accounting standards have been adopted by both the bodies. In our country, accounting standards which have been notified by MCA are the same accounting standards which are issued by ICAI's accounting standard board. So same standards. If not, we were supposed to read this separately, read this separately. There could have been questions on difference between this and that also. Thankfully, same accounting standards which are issued by Accounting Standard Board of ICI have been adopted by MCA. Under ICI, the board which regulates accounting standard is called as ASP. What is ASP? Accounting Standard Board. What is the board name? Accounting Standard Board. Similarly, under MCA, there is a body called NFRA. What is the body? For you to know. NFRA. People say NFRA. NFRA. National Financial Reporting Authority. That is the authority which will regulate the accounting standards and accounting in our country. So the list is like this. All the list 29. So these are all our syllabus. This entirely is our syllabus plus something more. Plus something more. Today's CA intermediate syllabus is very close to CA final syllabus that was there a while ago. Few years ago. Now, when we say 2012, 13, 14, 15, 16, whatever was CA final syllabus is today's CA intermediate syllabus. Plus little more. Minus few things. Okay, so accounting standards are written policy documents issued by government. Government as in MCA. Expert accounting body as in ICA or other regulatory body. In the future, if they create one new accounting body, new regulatory body, it will also be empowered to issue accounting standards. But whenever these bodies issue accounting standards, they need to importantly cover 4 points. Number 1, recognition. Number 2, measurement. Number 3, presentation. Number 4, disclosure. Number 1, recognition. Number 2, measurement. Number 3, presentation. Number 4, recognition. How to identify the transaction. Measurement. How to measure it in terms of money. Presentation. Where to write. Disclosure. After writing, what should I tell about it? All of these 4 points have to be covered by an accounting standard. So what is accounting standards? Please read this for me. It is a written policy documents issued by government expert accounting body or other regulatory body covering the aspects of recognition, measurement, presentation and disclosure. Once again, what is it? Now you will read. Accounting standards are other regulatory body covering the aspects of recognition, measurement, presentation and disclosure. What should we recognize, measure and present? Transactions. Disclosure. Giving enough information to users to help them take decisions. Are you getting it? How is an accounting standard issued? What is the journey of an accounting standard? How will it come to life? That is standard setting process. What is it? What is standard setting process? First of all, there is a problem. We identify the problem. What is the problem? We have a problem identifying the value of inventory. We have a problem identifying the value of asset. We have a problem computing depreciation. We have a problem writing sale entry. We have a problem recognizing liability. We'll identify the problem area. What is the problem? Then what do? We'll constitute one group. We'll identify one group of people. This guy is amazing expert when it comes to accounting. You come here. You are a legal expert. You come here. You are an industrial expert, understanding what is happening in industry. You please come. You are an educational expert. You come here. All of these intellectual people, will put them all to one room. Big boss madake. No. No, discuss this problem. What problem? That let's say the problem is depreciation. Different people are telling different methods. We identify one legal person, one tax expert, one finance expert, one accounting expert, one industrial expert, one market leader. Bring all of them, put them together in one room. They full study the problem. They come out with one draft solution. What according to them is the possible solution, they bring it out. That might not be absolutely clean, correct, perfect. That might also have some problems. Once they come out with one draft, this draft will be circulated to different bodies like SEBI, ICAI, ICSI, another ICI, Cost Accountant Institute. It will also be discussed at multiple platforms. When it is sent to them, they have some suggestions. They will give some suggestions. Whatever the suggestions that ICAI, ICSI, Cost Accountants India, and then SEBI, all of these people give, no, those suggestions will be adopted. Once those suggestions are adopted, the draft is revised. Revised draft of accounting standard is ready. This will be put on the website for open review of all the people. I can check, you can check, anybody can check. If you are really smart, if you identify something wrong with it, if you have a valid suggestion, you can give, you can comment. You cannot comment. First comment. Anyone reading this in 2025, comment. Not all that. Okay, you actually have a genuine comment to give. You give. That comment will also be considered if it is valid. Then they come out with one final draft. That is the birth of an accounting standard. What will happen first? We'll identify the problem area. Then what do? You create one study group of intellectual people. Then they study the problem, they come out with a draft solution. Once they come out with a draft solution, this draft solution will be circulated to different bodies. They will check, they will correct, they will give suggestions. Once those suggestions are adopted, final draft is ready. That will be kept open for comments of people. Once the comments of people are considered, accounting standard is ready, and that's how it is issued. Can we read this? See the standard setting process. First one, step one, identify area. Area means what? Problem area. Yeah? Not like area andre Jayanagara, Chamrajpete, Girinagara, Sita Circle, Bank Colony. No. Identify area means problem area. Depreciation is a problem area. Inventory valuation is a problem area. Intangible asset is a problem area. Impairment is a problem area. Provisioning is a problem area. Area in accounts will be identified. Then what do? Constitute study group. Then step 3, preparation of draft, and it will be circulated. Among whom? Ascertaining views of different bodies, ICI, ICSI, SEBI, all of these people. Then what do? Finalize the exposure draft. After that, consider the comments. Whose comments? Public comments. Public comments. Then what to do? Modify the draft. Finally, you will issue accounting standards. This is a journey. Every accounting standard that is there today out of 29, it had to go through this process. Like all the chartered accountants today had to go through the process of foundation, intermediate, articleship, final, crying, weeping, whining, and then chartered accountant. Same process every accounting had also gone through. First it was problem, then there was a group, then there was a draft, it seeked approval from several parties, then there was comments, then there was finalization, then it became an accounting standard. So it's a process. If an accounting standard started crying here and then gave up at fifth stage, it would have not become an accounting standard. If you have to become accounting standard, if you have to become chartered accountant, then you should not cry at any of the stage. You should go through everything and then finish it. And that's how finally one day you become a chartered accountant. Sir, but failures are also there, no, sir. This is interesting. People were asking, sir, pass percentage is 9% last time group 1, meaning out of 100 people who write, 91 people fail, only 9 people pass. Do you really think is it worth it to do a CS examination? See, it is only 9 people out of 100 people passing, but it's not like next attempt these 91 people will fail. Out of this 91, many will pass no next time. Are you getting it? So I'm not telling you that you will get a clean path without any failure, without crying, you will have a very happy journey till then. That's not I'm promising. That is possible, but not for all of them. We need to accept that. Only thing is, everyone would have to fail at some time. You need to remember that failing is okay, giving up is not. And another simple thought is, if I tell you you are 10 failures away from a big victory, how fast will you run through those 10 failures? It's okay when you fail first time. You know, no, 11th time you will win. You will be excited to fail second time. Why? Second time when you fail, you'll be like, yeah, I am 8 more failures away from being successful. You will run through very fast to third failure. But when you know that you will pass the 11th time and you have 10 failures in front of you, would you cry after every failure and then delay? Second failure over. Before third failure, you cry and postpone the third failure by 1 more year. By that, you're postponing your victory, no? So always remember, you are this many tough time, this much of tough time left before you have that happy time. So when it is tough time, no, run fast. When you're walking and it's stinking on the road, do you walk slow? Do you walk slow? No, you run. Because once that rough patch is over, it will be pleasant. Correct or not? When it is beautiful, then you walk slow. Nam jana angala. When it is very dirty, you go slow, complaining. When it is so beautiful, you go very fast. Don't do that. When it is all dirty, no, go fast and then finish that dirty phase so that you will get into that beautiful phase. It's all flowery, flowery, garden, garden. You understood the standard setting process, everyone? Okay. What is the benefit of accounting standard? Why do they actually issue accounting standards? There are three important points. One, standardization. Two, additional disclosure. Three, comparability. What is the first one? Standardization. What is the second one? Additional disclosure. What is the third point? Comparability. Standardization means I am doing one method of depreciation, you are doing one method of depreciation. She is doing one method of valuation of inventory, he is doing one more method of valuation of inventory. He is valuing the asset differently, she is valuing the asset differently. Then no, there is no comparability. There is no standardization. Everyone is doing whatever they want. To bring in uniformity, to bring in standardization, to bring in comparability, accounting standards help. Once accounting standards are issued, no, everyone is following the same policy. Uniformity is there, standardization is there, comparability will come, reliability will come. You can rely also no on whatever is being made. That is the benefit of accounting standards. Number one, standard. Everything will become standard. Everyone will follow the same thing. Second one, additionally, lot of things will be asked to be disclosed. Whatever law asks us to disclose, we will disclose. Beyond that, we'll be asked to disclose more. Then we also have comparability. Financial statements of one entity, financial statements of another entity can be compared. If you follow different rules, I follow different rules, can we compare? No. If both of us follow same rules, can be compared. Are you getting it? Very nice. Then only drawback is accounting standards cannot override law. If law tells A, accounting standards cannot tell B. Accounting standards has to be under the jurisdiction of law. Everybody understood? Very good. Now talking about accounting standards, we have two bodies. No, MCA is there, and there is also ICI. Who will issue accounting standards for whom? Why are there two sets? Why are there two sets? Very simple. Accounting standards for companies and corporates are issued by MCA. MCA, whatever we saw, no, that website is only for companies and LLPs. What if you have a partnership firm? What if you have a sole proprietorship? What if you have a corporation, trade union? What is applicable? ICAI standards are applicable. ICAI will regulate non-corporates. Corporates are regulated by MCA. ICAI regulates non-corporates. Corporates are regulated by MCA. So Ind AS is to be followed by whom? Usually companies. Beyond a certain point. Who doesn't follow Ind AS? Partnership firms and sole proprietors don't follow Ind AS. I and my partner together start business from tomorrow. So do we have to follow Ind AS? We start one company. Should we follow Ind AS or AS? Depends. Depends upon the scale of business. Sir, when Ind AS and when AS, how do we get to know? It's actually not needed to be known at intermediate level. But we'll still learn it. They have given it in chapter 1, little theory. So we will learn. So what are we going to learn now? We'll learn when is Ind AS applicable, when is AS applicable. Sir, I know the answer. AS is applicable in CA Inter. Ind AS is applicable in CA. I'm not talking about your syllabus. I'm telling about for a business entity when is AS applicable, for a business entity when is Ind AS applicable. Okay. People watching online, are people comfortable understanding everything, hearing it right? I forgot to tell you guys. When I asked the Minister for Finance, no, one online student told the answer right. Sorry. Huh? Might not be Google. Come on, yeah. They could have done ChatGPT also. Come on. No, no. I'll give the. I won't blame that someone has copied the answer from somewhere unless I have the proof. Proof secret. Now we are going to learn the roadmap for implementation of Ind AS in India. What is the roadmap based on which Ind AS is applied in India? See, this is for other than bank, NBFC and insurance company. Bank, NBFC, insurance company will discuss separate. Next page you open. You have bank, NBFC, insurance company there. So now we are talking about not bank. Now we're not talking about NBFC. We're not talking about insurance company. We're talking about a proper business, manufacturing business, trading business, service business. To them, in 2015, where were you people in 2015? School? 7th standard? 5th standard. 2015 or 5th standard? 16 or 6th standard? 17 or 7th standard? Wow. So easy to remember, no? For this generation of people. Covid, 10th standard. Exam skippo. Oh, English on the exam ಉಳ್ದಿತ್ತಲ್ಲ ನಿಮಗೆ? You wrote everything. Sorry. Which was that, like only English exam was PUC, second PUC. Only English was left. Then someone coughed. Okay. 2015. It was allowed on voluntary basis. Voluntary means what? I am not forcing any one of you. If any one of you wants to follow Ind AS, come forward. And some companies came forward, they followed Ind AS. So in 2015, was Ind AS compulsory in India? No. Ind AS standards were ready. But they told if anybody willingly, voluntarily wants to follow, they can follow Ind AS. But was it compulsory for everyone? No. In 2016, what did they do? They made it mandatory for everyone. No. For a specific class of companies. Which class of company? If the company is listed or it is in the process of getting listed. I'll repeat. If the company is listed or it is in the process of getting, if you have listed your company shares in stock exchange, if you have listed your shares in stock exchange, you are a listed company. You are a public company, but your shares are not traded in stock exchange. You are not a listed company. See, public company doesn't mean listed company. Public company doesn't mean there are a lot of public companies which are not listed. Listed means what? Your shares are being traded in the stock exchange. Your shares are being traded in the shares. If they are traded in the stock exchange, it's called listed companies. Now, Lenskart was public, but it might not have been listed till some time. Now they're going for listing. Port, it was public. A lot of people had stake, but it is not listed. But it's going to get listed very soon. Scam, no? This part. I don't want to be in trouble. But you understood now what I'm trying to tell. Example is so public company can be listed, but need not be listed. If you are a public company which is listed, then should you follow Ind AS or AS? Ind AS. From when? 2016, 1st of April, golden time, 1st of April 2016. You remember that century with 6 stitches, back to back 5 centuries. We were almost out of the tournament, but we came back to playoffs. We won, we came to finals only to lose and then make us cry. Shit, man. Sad memory, but it's okay. You wanted to know 2016, two big things happened. One, RCB came to final. Two, Ind AS became mandatory for entities whose net worth was more than 500 crores and whose parent, subsidiary, associate, or joint venture was fulfilling one of the conditions. How many conditions were given? Three. Number one, listed or in the process of you started doing paperwork, you started doing listing agreements, you met a commercial banker, you are doing underwriting, you're going for issue of shares, you're going for IPO, then it is again in the process. Right now, Lenskart and both, the day I'm taking this class, both of them are in the process of getting listed. Are you getting it? Okay. Now they have to follow Ind AS. Second one is net worth. What do you mean by net worth? Your assets minus no. That is turnover. Net worth is different, turnover is different. Net worth means today, if you close your business, sell all the assets, pay all the liabilities, how much money will be left with you? It is capital plus reserve or assets minus liabilities. It is capital plus reserve or assets minus. How much is that? That should be 500 crores is zyada. It should be more than 500 crores. Then Ind AS is applicable. Or associate, subsidiary, joint venture of it. For example, let's say you are a listed company. I am your subsidiary. I am your, to you if Ind AS is applicable, it is applicable to me also. Ontara antroga. Contagious disease. Someone in the family has, everybody will have. Yesterday, father had cold and cough. Today, you have it, your brother has it, your sister has it, your mom has it, everybody in the family has it. Everyone are coughing together. One person went to doctor and then got the medicine, everyone in the family can take. In the morning when you're doing chitrana, for that only you can put that paracetamol. Why? Everyone in the family has same now. Okay, so entire family also Ind AS will be applicable. From when? 2016. This is phase 1. This is phase. Now we'll go to phase 2. Phase 2, they made it mandatory. If the company is listed or in the process of getting listed, net worth limit was 500 crores. No, it was dropped to 250 crores. It was dropped from 500 crores to, let's say I'm a company, my net worth is 300 crores. I am not listed and I don't have holding subsidiary, associate or joint venture. What is my net worth? 300. From when is Ind AS applicable to me? Voluntarily, if I want, I can follow in 2015. Or in 2016, it would have been applicable if my net worth was more than 500. It is less than 500. It is 300. So I am not triggered this condition. Let's say I am not listed or in the process of getting listed. I don't have holding subsidiary or associate or joint venture also. To me, Ind AS becomes applicable from 2017 April. Why? Because my net worth is more than 50 crores. Interesting? Say something. Okay, now you should ask some interesting questions. Yeah. Come on, I am expecting some questions. ನೀವು ಕೇಳಿ ಅಂದ್ರೆ ನಾನು ಕೇಳ್ತೀನಿ. If you don't ask, I will ask.
Sir, what if it's a holding
Beautiful question. What if
holding company is a not listed company?
holding company is not a listed company, but subsidiary company is a listed company. Our subsidiary company is having net worth more than 500 crores. Father is not rich, son is rich. जैसे ना अमीर बाप का बिगड़ा हुआ बेटा. Sometimes it's में अमीर बेटा का बिगड़ा हुआ बाप, like Yuvraj Singh kind of an example. Possible. Very interesting question. You understood this example? Holding company is not listed. Holding company's net worth is not more than 500 crores. Subsidiary company's net worth is more than 500 crores. Or that's little irritating. Might not be technically possible. Let's say subsidiary company is in the process of getting listed. Holding company is not listed. Holding company, okay, Ind AS actually is not applicable by default. Subsidiary company, it becomes applicable from 1st of April 16. Because it is applicable to subsidiary, holding also should follow Ind AS. Let's say you get cold. I don't want you to. Let's say you get cold from someone in the class today. You go home. Because of you also, father will get cold. If father gets cold at the workplace, if he comes back home, you will also get it because of it. It's contagious. Father to son, son to father. Brother to sister, sister to mom, mom to father, father to grandfather, grandfather to grandson. Any combination, yeah. One person in the family has to follow Ind AS means everyone in the family also has to follow Ind AS. AS will not spread like that. Ind AS will only spread. Good things don't spread so easily. Bad things only will spread. And it's a more complication. Ind AS will spread like that. Very good. Interesting question. That's one of the questions that you should have asked. Anybody has another question? There can be another good question. If you don't ask, I'll ask. I'll ask. In 2016, my net worth is 500 crores or let's say 600 crores. In 2017, my net worth dropped to 100 crores. Why? Huge loss. What happened in 2016? My net worth is 600 crores. Huge net worth. Ind AS became applicable. In 2017, next year, my net worth dropped from 600 crores to 100 crores. Think this question you should have asked me. Because you didn't ask, I am asking. Tell ya. Then 2016 Ind AS applicable. 17, 18. Continue. Continue or not continue? You will continue. India is in the process where we are transforming the entities we are following AS to Ind AS. We are not doing Ind AS to AS. No. AS to Ind AS we are doing convergence. You are a company which is following AS. Over a period of time, I'll ask you to convert to Ind AS. But I will not do you are following Ind AS. Now you follow AS. No. There is only going. There's no coming back. There's only going forward. There's no coming back. Reverse gear is not there. I hope you understood what I'm trying to tell. So over a period of time, entities, big entities, will transform from AS to Ind AS. There's no coming back. Any other doubt? Akka?
But voluntary registration, so you said like network should be more than.
No. Voluntary was in 2015. For voluntary, there is no limit of net worth. There is no need to be listed. Any company. I hope you understood. Akka? Okay. Now, whatever we discussed so far is for other than bank, other than NBFC, and other than insurance company. Why? For bank, NBFC, and insurance companies, no, it is given separately. It's given separately. Initially, this was not part of your syllabus. Yeah. If you see May 2024 edition of ICI module, this was not there. This all were not there. This was added recently only in the study module. This was there in reality, but it was not there in our syllabus. In our syllabus, this got added recently. But were there any questions on this? Hey, this chapter is highly unlikely when it comes to questions in the exam. But We need to know this, because without this, how will we ever learn anything? So this trying to build our good base. Are you getting it? Very nice. Come on. Roadmap for implementation of NBFC. No, first. Shall we see NBFC? NBFC from November 2000, sorry, from April 2018, recently, they made it mandatory. For whom? Whether an entity is listed or not listed. Doesn't matter. Only for listed entity, non-listed, no, it's not like that. Listing is not the condition only. When net worth is more than 500 crores, it is mandatory. When net worth is more than 500 crores, it is mandatory. From when? 2018. Very, very recent. In 2019, they told listed or in the process of getting listed and net worth is more than 500 crores. And unlisted companies also, if your net worth is more than 250 crores but less than 250, to you also it's applicable. Basically, limit was how much here? They reduced the limit to how much here? 250. In 2018, limit for Ind AS being applicable to NBFC was net worth of 500 crores. In 2019, the limit was revised to 250 crores. Is that okay? Pakka? We don't have to learn this in detail, yeah. Not required in detail. Just remember 500, 250. And if NBFC's net worth is less than 250 crores, it doesn't have to follow Ind AS. It doesn't have to follow. Pakka? Voluntarily, can it follow Ind AS? No. Ind AS is not allowed as voluntary basis for NBFC. NBFCs and banks are very closely monitored by RBI. They can't do anything voluntarily. It has to be always under the supervision of the government. So can they voluntarily follow Ind AS? Voluntary option of adopting Ind AS is not available to NBFCs. That is only available to other than NBFC. If your net worth is more than 500 crores from April 18, if your net worth is more than 250 crores from April 19, Ind AS is applicable to NBFC. If it is less than 250, not applicable. But I want to follow. Can I follow? No. You understood NBFC category? Pakka? Come on, let's go to commercial banks. Initially, government had planned, like we planned now for NBFC, 1st of April 18. Similarly, RBI had also told from 1st of April 18, will make Ind AS applicable to banks. Then you know what did they do? They made one press release in 2018, 5th of April, saying that no, we're not thinking right now. We'll postpone it by one more year. Next year, no. What did they tell? Next year, April 2019. Then 22nd March 2018, they made one more announcement. Sorry, 22nd March 2019. They made one more announcement before 1st of April only. They made one more announcement saying that it will be postponed. This time I will not tell 1 year. Let's see. Let's see. I will tell you when we will do. Initially, what was the plan? Initially, what is the plan? 1st April 2018. Then they told 1 year late. 1 year late means 19 April, no? Before that only, March 22nd, they passed one more circular saying that we'll make it applicable not now, later. I will tell you when. Right now, though, no. And the date is not yet been announced. So to banks in India, is Ind AS applicable? You don't follow Ind AS. You don't follow Pakka. So do NBFCs follow Ind AS? Yes. From when? 2018. 2000? In 2018, applicable for net worth more than? Very good. 2019, applicable if net worth is more than? Banks, initial plan 18, then change it to 19. Now deferred indefinitely. Now, no, right now there is no update. Okay. Let's talk about insurance companies. Let's talk about insurance companies. Same story like bank. What did they tell? First, MCA told we will start it from 1st of April 2018 ಅಂತ ಹೇಳಿದ್ರು. When did they tell? What did they tell? 1st of April 2018 ಅಂತ ಹೇಳಿದ್ರು. Then what happened? Then they told we'll defer it by 2 years. That is till 1st of April 2020. On 21st of January 2020, it's been told that it is deferred to a future date which is yet to be announced. It is yet to be. So tell me, in India, is Ind AS applicable to NBFC? All NBFCs? Some NBFCs. Net worth more than 500, 2018 April. Net worth more than 250, April 2019. Banks, not applicable. Insurance companies, not applicable. Individual companies, there is phase. 2015 voluntary, 2016 net worth more than 500, 2017 net worth more than 250. You get it? Everybody. That's it, yeah. This is the story of Ind AS. applicable in India. And Ind AS is not part of your CA intermediate syllabus. Your entire syllabus is based on accounting standards. Only in first chapter you have an introduction to what is accounting standards. In that, a small part is Ind AS, and Ind AS has so many applicability parts. We read this, and this you will read it in CA final financial reporting and not in CA intermediate advanced accounting. By this, we have successfully completed chapter 1, which is on introduction to accounting standards. But to make you understand, entire thing what we read is theoretically very important, practically in the examination very less relevant. This is because we've so far have May 2024, September 2024, Jan 2025, May 2025, September 2025 is the exam is also concluded. And in none of the examinations have they asked any question of this, not even for 1 mark, and highly unlikely also going forward. But we did it with full precision. Every single line we've read it in detail and we've understood. And you also, when you're revising, revise it. But just telling you the fact that question has been not asked in the last 5 attempts. But can it be asked in the future? Highly unlikely. But if they ask, it is not difficult to write. Theoretical questions are almost not there in your syllabus, in your paper, if you observe. They're only questions with numbers. Theory questions have been majorly covered in MCQ only. You got it? They might ask one net worth based condition question with option A, B, C, D from when is it applicable or something like that. Be mentally ready for it. Revise it on par with every other unit. We took about 59 minutes. Okay, just 1 hour to do this chapter. When you revise it, you can revise everything in about 10 minutes. Is that okay? Very good. I have given a small QR there using which you will get a quick revision video which is about 10 minutes on the entire chapter 1. Entire chapter 1 can be revised in about 10 minutes. Or you can use this book and then revise. If you want in detail, you can watch the class again, which is 1 hour. But if you remember the class topic, you want little help, 10 minutes revision will happen using quick revision video. Or if you want to read it, you can read the chart and then discuss it and then finish it. But do revise this chapter. Is that fine? Very good. This brings us to the end of chapter 1. Let's take a short break for breakfast. And on the other side, let's start with some accounting based unit. And we will do applicability in tomorrow's class. Is that okay?
Sir.
Good morning once again, everyone. Welcome back to CA Intermediate Advanced Accounting. We've so far finished chapter 1, which is Introduction to Accounting Standards. We're now doing chapter 4, unit 3, which is Accounting Standard 17, which actually talks about segment reporting. Can we begin? Yes. Come on. Segment reporting. If you remember in our introduction of the index, I gave you an example saying that I sell 4 variants of items in my restaurant. What do I sell? Idli, dosa, chutney we won't sell. Yeah, chutney is free with idli and dosa. We'll sell coffee, tea. We'll also sell uppitu or karabat. What all do I sell? Idli, dosa, karabat. My restaurant, yeah. Karabat and what to say? They're scolding each other. Vade ante. Coffee, tea. I prepare my profit and loss statement by selling everything together at once. I want to know which breakfast item is making me eat lunch. Meaning, which is earning me more money. I want to know. Is it idli which is doing better, or is it dosa which is doing better? Or is it coffee, tea? Or is it karabat? I don't know. So what do? I'll prepare P&L statement, not for entire sale as a whole, but idli 1 P&L, dosa 1 P&L, karabat 1 P&L, coffee tea 1 P&L. Segment wise, I'll prepare a report. That's segment reporting. Yeshas Academy, if you see, no, Academy also has 2 branches. One, the branch that you're sitting in, Jayanagar, we have a branch in Sheshatripura also. Now, let's say at some point of time, the institute wants to know which branch is giving how much revenue. What do? We prepare statement of profit or loss not for the academy as a whole. We'll prepare one report for Jayanagara branch, one report for Sheshatripura branch. That is also segment reporting. Here, what am I doing? I am dividing my business based on the geographical location area in the city of Bangalore. I can divide it slightly differently also. Rather than dividing it as Jayanagara Sheshatripura, I can divide it vertically. Foundation, inter, final, CS, ACCA. I can divide it based on that also. Can I do that? If I do that, that is also segment reporting. But there, the basis of segregation is not the geographical location, but it is based on the product. That is based on the product. That is business segment. Based on Jayanagara Sheshadipura, if I do, it is geographical segment. In our restaurant business also, if I divide the business into idli segment, dosa segment, coffee tea segment, karabat segment, what is it? Product based bifurcation. Let's say my restaurant has one branch in Jayanagara, one branch in JP Nagara, one branch in Indira Nagara, one branch in Vijayanagara, one branch in Attiguppe, one in Electron City, one is Marathalli. All these places also have branches. Idli sold in Jayanagara, idli sold in Vijayanagara, idli sold in Chamarajpet. Together I prepare one table. That is product segment. Idli. Wherever it is sold, idli is idli only, no? Am I right? So idli in the ಎಷ್ಟು sales, idli in the ಎಷ್ಟು expense, idli in the ಎಷ್ಟು profit. That is business segment. If I don't do that, whether it is idli or it is dosa or it is coffee, Jayanagara how much profit, Chamarajpete how much profit, Marathalli how much profit. If I do that, that becomes geographical segment. So an entity which is preparing its financial statement can decide to divide its entire financial statements into segments. Option number one, based on business. Option number two, based on geography. Option number one, based on business. Option number two, based on if Yeshas Academy divides its P&L statement into how much revenue from foundation, how much revenue from inter, how much revenue from final, then it is business segment. If we divide it based on business revenue from Jayanagara branch, business revenue from Sheshadipura branch, business revenue from online facility, then it is geographical segment. Are you getting the classification here? It is entity's personal choice to decide whether to do it based on geography or to do based on business. Everybody understood? Why does this entire segment reporting come into picture? Why does this come into picture? There's a great marketing researcher who gave us this beautiful thought about the fact that if you sell 100 products in your shop, assume a departmental store, Kirani Angdi, or what you say, Children Angdi, whatever you call it, departmental store. How many products am I selling? 100 products. 20 products that I sell in my shop will give me 80% of my revenue. And 80 products that I sell will give me only 20% revenue. What he told is 20% of the products will give you 80% revenue, 80% of the products will give only 20% revenue. Our major focus should be on that 20% product, which is actually contributing to 80% of our revenue. Our focus should be on that 20% of the products, which is actually giving us the 80% revenue. Are you getting what I'm trying to tell? Do you have any clue who's that uncle who told this statement? I've told the statement what he made. Anyone would have read it in marketing management, become. Now accounts, if I tell something, you'll tell, sir, I'm from direct entry. Now when I tell marketing management, our direct entry kid should tell the answer, no? Nobody? His name starts with P. Okay, I'll show you his photograph. It is called Pareto analysis. Oh, 1 second. Dinosaur bantu. He came ಮಾಡ್ಬೇಕಂತೆ. You're like, sir, press the space bar. Press the space bar. 1 second, yeah. I didn't know what to name. ಡಬ್ಬಾ ತರ ಇದೆ ಹೆಸರು ಅಂತ ಹೇಳ್ಬಿಟ್ಟು ಡಬ್ಬಾ ಅಂತಾನೆ ಇಟ್ಬಿಟ್ಟೆ. ಸೊ ದಿಸ್ ಇಸ್ ವಿಲ್ಫರ್ಡೋ ಪರೆಟೋ. Who's he? Wilfredo Pareto. Wilfredo Pareto gave us a thesis which says that if you are running a shop providing 80 products, sorry, providing 100 products, out of 100 products that you sell, only 20 products will give you 80% revenue. And 80 products will give you 20% revenue. Let's say, let's localize the example. I run a departmental store. Okay. In my shop, I will sell rice, wheat, ragi, rice flour, wheat flour, and then ragi flour, pulses, variety pulses, 8-9 varieties of pulses, masala. So I'll sell milk, curd, shampoo, toothpaste, toothbrush. Then what else do we sell? Soap. What soap? Maig hako soap, batte hako soap, patre hako soap, washing machine hako powder. Everything I sell. I also sell agarbatti. Out of 100 products, no, some 20 products are 20 varieties of agarbatti. Kingu, small, cigarette, yeah. Now, That cigarette, which is only 20, like in my big shop, no, in small box, my cigarettes are there. This 20 units of cigarette, what I sell, will contribute to 80% of my total sales. So many grains together, 80 products that I have, gives me 20% revenue. In a month, if I have 1 lakh rupees sales, 80,000 revenue has come from sale of cigarettes. 20,000 revenue has come from sale of rest of the things. So, what product should I ensure that I will never go out of stock? Regularly customer will come for that only, no? Am I right? So, I should ensure that it will never go out of stock. So, management's focus should be on those products which contributes to 20% of the inventory but contributes to 80% of our revenue. To know which product is contributing majorly to our revenue, we need to do segment reporting. We need to do. Did you understand this? Very good. So in segment reporting, the business will be divided into small parts called as segments. Two types. One, based on the business. Two, based on the geography. Which is right? It's up to them. It's up to them, their choice. If they think the geographical location where they do business affects their profit the most, so then they should divide it based on the geographical segment. If they think the product that they sell is more important, not the place, then based on the product, that is business segment. Are you getting it? How do we identify the segments, business segments or geographical segment? And certain segments have to be reported separately. I prepare P&L for the entire entity. For not every product, I'll draw a separate line. For few segments, I'll draw a separate line. Total sales in the restaurant. Next to that, I'll put one column, idli, because idli is a top selling item, idli, dosa, and others. I might be selling 8 more items, but all those 8 more items, bisvale batu, puri, chapati, uppitu, kesri batu, puliyogre, wangi bath, all of it together is in others column. Idli and dosa are two prominent things. So my entire business is divided into idli, dosa, and others. Others I won't even write. Write only idli, dosa, because they are the main key elements. In a restaurant, if idli and dosa is good, that's a good restaurant. If idli is only not nice, idliನೇ ಮಾಡಕ್ ಬರಲ್ಲ ಅವ್ರಿಗೆ ಇನ್ನೇನ್ ಮಾಡ್ತಾರೆ ಅದೊಂದು ವಡೆ ಹೋಟ್ಲು ನೋಡಿಸೆ ವಡೆ ಮಾತ್ರ ಚೆನ್ನಾಗಿರುತ್ತೆ ಆ ಹೋಟ್ಲಲ್ಲಿ. You can come to such conclusion. So what I'm trying to tell you is key important areas will be identified and those will disclose as a separate segment. Are you getting it? That segment, what we open separate column, is called as reportable segment. What is the new word that I just taught you? So I taught you three words. One, business segment. Two, geographical segment. Three, you tell me what is business segment? Divided based on the product. What is geographical segment? Divided based on the geographical location. What is reportable segment? It can be a business segment or it can be a geographical segment, which is identified and we show the revenue, expense, profit, asset, liability from that segment as a separate line. And at CA Inter, we are not learning to do segment reporting. Sad and unfortunate, but we are not doing segment reporting. We're only identifying the reportable segment. We're only identifying which segment should be reported separately. But at the end, I'll also show you one segment report. But that's beyond the syllabus. For the syllabus, what have they asked? Which segment is reportable? Which segment is not reportable? Come to this last yellow color box. Reportable segment. Business segment or geographical segment will become reportable segment and requires a separate disclosure. Requires a separate disclosure if T R A M TRAM, or you can keep the acronym as MART. If this condition is fulfilled, it will become reportable segment. What are the conditions? How many are there? 4. 1. T R A M TRAM. We'll start with T. What is T? T ಗೊತ್ತಿಲ್ಲ sir, ಕುಡಿತಾರಲ್ಲ. No, not that. Yeah, here T is turnover. What is T? Turnover means sales, revenue. If the turnover or revenue from that business segment or that geographical segment is more than or equal to 10%. I'll repeat. If the turnover or revenue from that particular segment is more than or equal to 10%, then that becomes reportable segment. What if it is less than 10%? Not reportable. When does a segment become reportable? When the turnover or the revenue is greater than or equal to how much? Once again, if the turnover or revenue is greater than or equal to how much? Then it will become reportable. Pakka. Okay, let's see it with numbers. Now we've done only part of it. We'll come back to it later. I want you to come to questions. If you come slightly down, you have questions. I think in the next page. Do you have question in the next page? It is called AQ, accounting quotient. People say no, your intelligence quotient, IQ is high. Am I right? They say emotional quotient is high. Similarly, to do well in accounts, you need to have AQ, accounting quotient. Let's increase our accounting quotient by solving AQs. AQ1, this is identifying reportable segment based on turnover. Based on, so we have three segments. I sell car, and for that car I sell spare part, and I do service of that car also. Sale of cars, how much have I got? 40, maybe 40 lakhs or 40 crores. By making service of that cars, regular service, how much revenue have I earned? 10. By selling spare parts, 300. Totally my revenue is how much? 350. For each segment, I'll identify its percentage. Before we do that, can you identify and tell me, is this segments business segments or are these segments geographical segments? Everyone understood that these are business segments? Based on the product, we have bifurcated it. Please do 40 by 350. What do we get? 40 by 350. Everyone, 40 by 350. 11.43. Similarly, do 10 by 350. What do we get? 10 by 350. 20%. No, 2.86%. Should multiply by 100. Don't forget that. Then 300 by 350 into 100. 85.7. Now tell me, how do we tell whether a specific segment is reportable or not? If the turnover from this segment is greater than or equal to how much? Very good. Is 11.43 greater than or equal to 10? Yes. So then it is reportable segment. Is 2.86 greater than or equal to 10? No, this is not a reportable segment. Is 85.71 greater than 10? This is reportable segment. So what is the conclusion? Goods segment and spare part segment is reportable segment. Is reportable segment. When I prepare my statement of profit or loss, I'll prepare for entire entity as a whole. I'll prepare one separate column for goods segment, one separate column for spare part segment. Understood? Copy the answer. Everyone, quick, quick, quick. Should write quick. Write it there only. Didn't get the book? We'll collect it later. Finished? AC remote. TV remote should be there only behind the TV. What happened? On arriva. It should be there. Behind the TV. So far, can hello. The one was and let them try. Calculator should be brought to class. Phone cannot be used as calculator. Very important. Last batch people got kicked out because they were using phone as calculator. And then I told get calculator tomorrow and come to class. So I told sir I have calculator. Then again he still got kicked out. You know why? He was using phone not as calculator, but he was texting. But pretended like was using it as calculator. Okay, good. How do we decide whether a segment is reportable or not? Based on four conditions. First one is turnover. Second one is result. Second one is very good. And when we talk about result means profit or loss. Profit is positive, loss is negative profit. that profit or loss, whatever is there, that should also be greater than or equal to 10%. If it has more sales or if it has more profit, that will be considered as a reportable segment. Can we do this? Okay, everyone try AQ2. You guys try AQ2. Let's see. You tell me which of these segments are reportable, which of the segments are not reportable. Please try in pencil. Please try in pencil. Unless you are 100% confident that your answer is right. Unless you are 100% sure, don't write it in pencil. Write it in pencil only. Online friends also you should try. So some of you don't have the book, did not collect or they did not give. The very thing. After the class, they ನನಗೆ ಬೆಳಿಗ್ಗೆ ಎಲ್ಲರೂ ಡಿಸ್ಟ್ರಿಬ್ಯೂಟ್ ಆಯ್ತು ಅಂತ ಹೇಳ್ಬಿಟ್ಟು ಅದಕ್ಕೆ ಕ್ಯಾಲ್ಕುಲೇಟರ್ ಕಾಮರ್ಸ್ ಸ್ಟೂಡೆಂಟ್ಸ್ ಎಕ್ಸಾಮಿಗೆ you taken phone. Forward. Tomorrow calculator is needed, okay? If anyone using phone, where is your books? Notebook to write. Would have got something, no? Sitting like they're sitting in a theater. Open the book. Second PUC accountancy book. Wow, shabash. Pen, you got it or pencil? Got pen. Look at the board, see the question and try writing the answer. March. How? I was expecting from. Yeah, it was combination. What's happening? So you know how long you do training. On the calculator. Shall I? You pick something. Pick something. Let me solve. It's got scientific help. Gift it to someone. Gift it to you, the student in your neighborhood who's just clear distance and then going to college. And then from him you take the normal calculator. Yeah, put an Instagram post. Anyone who wants my scientific calculator? In return, I want you to buy me a normal calculator. Okay, good. I hope all of you have tried. I'm not expecting you to have got the right answer, but I want you to try. This is not mathematics. It's not going to be how we do in mathematics. Don't take total of the result 5 minus 11 plus 8 plus 2 minus 1, whatever we get on the 10%. No. What would have to do when there is profit and loss is according to accounting standard 17, we need to segregate the profit making segments and loss making segments. We need to segregate the profit making segments and loss making segments. I'll write 5 profit, 11 loss, 8 profit, 2 profit, 1 loss. I segregated profit making segments, loss making segments separately. Then I should take total. Total profit separate, total loss separate. Total profit is how much? 5 plus 8 plus 2, 15. 11 plus 1, 12. So how to compute percentage? I cannot do 5 by 15, 8 by 15, 2 by 15, 11 by 12 and 1 by 12. Wrong. Sir, you'll do 15 minus 12, 3 as the denominator. Again wrong. If you take 3 as denominator, 5 as numerator, you have more than 100%. Are you getting it? What accounting standard wants us to do is step 1, segregate the segments into profit making, loss making. Step 2, take the total of profit making segments, total of loss making segments. Total of profit making, total of loss making. Then step 3 is compare total profit with total loss and identify whichever is higher. Total profit is how much? 15. Total loss is how much? 12. Whichever is higher is 15. So 15 is going to be the denominator for everything. Sir, if it is loss, should I do minus 11 by 15? No. 11 by 15. It doesn't matter whether it is profit or it is loss. We have to think there is modulus symbol. Modulus means minus is plus. Plus is also plus. Ignore the negativity. Understood? So how do we compute? 5 by 15 into 100. How much is 5 by 15 into 100? 33.33. 11 by 15 into 100. Very good. 8 by 15 into 100. How about 2 by 15 into 100? 1 by 15 into 100 is 6.67. Now this will be checked if it is more than or equal to 10. Is it more than 10? Yes, reportable. Is this more than 10? Yes, reportable. Is this more than 10? Yes, reportable. 13.33, is it more than 10? Yes, so this is also reportable. 6.67 is not more than 10, not even equal to 10. So this is not reportable. So in this case, in this business, goods segment, service segment, spare segment, warranty segment are reportable. Only replacement product segment is there. No, that is not reportable. So what segments are reportable? Everything except replacement segment. Got this? How many of you got this right? Very good. Very good. Impressed. I want you to read the statement that I have given below. Read this. For result-based identification of reportable segment, as in this problem. What should we do? Number 1. What is number 1? Segregate segments into profit making and loss making. Is it given there? Segregate segments into profit making and loss making. Read point number 2. Identify total profit from profit making segments and total loss from loss making segments. We need to identify total profit, total loss. Then compute percentage of result considering higher of the total as the base. And you should do it in absolute terms, meaning ignore the negative symbol for total loss. And then if such percentage is greater than or equal to 10, that segment becomes reportable segment. Everybody understood? Copy the answer. Those of you who got it wrong, copy, quick. Online, did you understand? Dikshit, Maheshwari, Rakshit, Rishabh, Preetu, Aparajita, I remember. No. Her name is Aparajita. Aparajita Allah. This is not movie. It's a name. Hmm. This student happened to attend the previous batch also. And she came, sir, is this September batch? No, this is May batch. September batch will do it again separately. You can attend that. After your early bird. Hey, how many of them in the class are early birds? Oh, I think half. Down. So now you are no more early birds. Now you are birds. You stop flying. It's okay. If you are not early bird, accounts is starting today only. Okay. Done. Everybody. Yeah. If in case you are an early bird, you might have just said, okay, Baba, come on now, let's go ahead and discuss. AQ3. Sorry, that only these people understand. Rest of them don't. Next out, you will hear it later. Now let's do AQ3. To go to AQ3, reportable segment is identified based on turnover. Did we identify based on turnover? Need to do a small question where we had to identify how much of the turnover is coming from that segment. If it was equal to or more than 10, then it is reportable. If not, it is not. Then we also did based on result. We did it slightly differently. Result, profitable segment separate, loss making segment separate, total, whichever is higher, that is denominator, take the numerator, multiply by 100. If it is greater than or equal to 10, reportable, otherwise no. P over R over A. A for apple and Satya cap. You didn't tell apple. A for asset. Asset. If the asset in that segment is greater than or equal to 10%. If the assets in that segment is greater than or equal to 10%, then that segment is called as reportable segment. Then that segment is called as. Shall we see which segments are reportable? We'll do a question. Why? That's how we understand. Come to AQ3. Easy, yeah. They've given segment-wise assets. Total assets is 200. 220 by 200 into 100, 10%. 30 by 200 into 10 into 100, 15%. 150 by 200 into 100. Okay, which of it is equal to or greater than 10? 10 and greater than 10, reportable. 15 greater than 10, reportable. 75, reportable. In this business, all segments are reportable. In this business, all segments are copy. Quick, quick. Everybody done? Pakka? Very nice. Now, I want you to tell me. I taught you turnover based condition, you understood. I taught you result, you understood. I taught you asset, you understood. Is it one of the conditions or is it all the conditions? That's the important point, no, that we should learn. Should the turnover be equal to or more than 10, result also equal or more than 10, and asset also equal or more than 10, or one of them? It is one of them. Let's say my assets are more than 10%. If my result and turnover is only 3%, 4%, still reportable segment. One of the condition, if it is fulfilled, reportable. Are you getting it? There is no requirement to fulfill all the three conditions. It's one of the three, not all the three. Got it? Then, when we spoke about turnover, in the bracket I had given one word. What is it? Internal plus external. Internal. What is internal? What is external? In one company, there are 3, 4 departments. One department will sell the goods to another department. Internal. One department will sell the goods to outsider. External. Internal sales is also considered. External sales is also considered. When we see 10% or more, we should check turnover in total, not only external. Should check turnover in total, not only external. Got it? On that, we'll do one question so that you understand. Come to AQ4. Did you come to AQ4? Everybody sees this. I have internal sales. I have external sales. I have total sales. I want to now identify which among these A, B, C, D, E 5 segments are reportable. How do I do this? Very simple, yeah. Total turnover of segment A 40. Total turnover of the business as a whole 495. I will do 40 by 495 into 100. I want everyone to focus and not write. I will give you time to write. Take your calculator and help me compute the numbers. 40 by 495 into 100. Very good. 45 by 495 into 100. 9.09. 120 by 495 into 100. 24.24. 150 by 495 into 100. 30.30. 140 by 495 into 100. Understood this? Now you will check if it is 10% or more than 10%, then it is reportable segment. 8.08, not reportable. 9.09, not reportable. 24.24, yes, reportable. 30.30, yes, reportable. 28.28, yes, reportable. So what segments are reportable? C, D, E. What segments are not reportable? A and B. A and B is not reportable. C, D, and E is, once again, A and B not reportable. C, D, and E. Pakka. We know it till here. Now I'll teach you something new. The answer is incomplete. The answer is accounting standard 17 tells us one more point to consider. What does it tell? It says that Whenever we are taking revenue as a basis to identify reportable segment, whenever we are identifying segment based on revenue, we need to ensure that from the reportable segments for which we prepare separate report, we should contribute to minimum 75% of external revenue. They should contribute to minimum 75% of external revenue. I'll repeat once again. Based on turnover condition, we identify reportable segments. Such segments, what we identify as reportable segments, based on turnover, should contribute to minimum 75% of what? External revenue. What if there is one entity? In that there are a lot of segments. One segment has huge internal transfer, but it does not have external sales. One more also, huge internal, no external, or very less external. And we identified those 2-3 segments as reportable segments. From that segments, actual external sale made is less than 75%. Then that's not sufficient. I'm not telling you don't report them. I'm telling you can report them. Identify more segments as reportable such that external revenue reported should be minimum 75. Should be minimum. This is also based on management discretion. What do you mean by management discretion? There is no condition. You can pick any of the segment as reportable segment. We can pick any of the segment as reportable segment, though it doesn't fulfill 10% criteria. You did not understand much, no, by theory. Standards are like that. When we explain the statement, it would not make much sense. To understand that, you need a different intellectual level. If you had it, why would you attend class? If you had it, it's like you're on par with CA intermediate pass out student. So, if I explain the same thing what I gave here in these two lines in the form of a numerical, you will understand it better. Let's go back to AQ4. Shall we? Come to our AQ4. This 8.08, 9.09, 24.24 is there, no? Is it internal or external? Total. Now, which of these segments are reportable? C, D, and E, no? How much is C is external? It's total. Akka, 280 by 240. 33 point. So, segment C comprises of 33.33% of the external revenue. Don't write, but understand. How much of the external revenue is coming from segment C? 33.33. Is segment D also reportable? How much is its external revenue? 10 by 240. 4.16 or 16. After 16 you have 6. So round it off to 17%. Similarly, do for segment E, which is reportable. 120 by 240. 50%. Understood? So external revenue is how much? 33.33, 4.17 and 50. From reportable segments, how much external revenue are we getting? Add it. Add those three. What do we get? 33.33% plus 4.17% plus 50%. 87 point. Alternative. Please do like this. Take 80 plus 80 plus 10 plus 120. That is the external revenue from reportable segments. Take 80 plus 10 plus 120. Divided by 240. Same 87.5. You understood two ways to arrive at the same thing. Either take individual and then total, or take the total only. So can I say 87.5% of the external revenue comes from reportable segments? I'll repeat the statement. Try and make sense out of this. I want everyone to listen. 87.5% of external revenue comes from reportable segments. Am I right in the statement? What is it? 87.5% of external revenue comes from reportable. Then that 75% criteria is fulfilled. Should be more than 75. How much is it? 85, 87. Should I identify among A and B any segment as reportable? What if this percentage was not 87? It was 68%. 67. Okay, very nice number. Nowadays trending. Let's assume it is 67. Then what do you do? Then among A and B, we need to identify one segment as reportable segment such that it comes to minimum 75. Our choice. Management discretion. You can take A or you can take B. You can do inky pinky ponk, your choice. Or you can do B. Or you can take A. You don't have to give reason. Your choice. CDE compulsory. If CDE is external revenue doesn't come to 75. Among A and B, you can pick any. That is management's discretion. Management's choice. Paka. See the conclusion? Only C, D, and E are reportable segments. As external revenue is 75% from these or more than 75. There is no need to identify any other segment as reportable. Paka. Copy. Quick. Very quick. Come on. Fast. Why is 67 trending? Don't know. No reason. No reason. Prime number, no? Sir, prime number ಅಂದ್ರೆ ಬೇಡ commerce ಅಲ್ವಾ? Not divisible by any number other than itself and one makes it prime. So how to identify whether it is prime? Not needed, not required, not part of syllabus.
Show that.
So the
That's a
I'll sure. Let's scroll once everyone.
like this. Okay.
Everybody done? Can I scroll? Akka? Thank you. Okay, yeah. Let me scroll down.
Minus one by one.
If you can write in that box, you write. If you can't write in the box, you can write in your notebook. You always have the choice. In order to save time, I have given space to write there only, but there is no compulsion that you should write in that book only. Can't sit tidy. And no sharing. One book divided by two people. One of you writing notebook, one of you writing this. You didn't get. You get it after break. And try the next take. ಏನು ಬರ್ದಿಲ್ಲ very good. So this is the pair picture of copy. Looks like all of you have finished AQ4. Can I take you to AQ5?
Yes, sir.
Everybody ready? Okay. Sir, can we take A for external revenue, though A is not fulfilling 10% condition? Okay, Akila. At first, A will not be taken as a reportable segment. Based on 10% criteria, A and B are not reportable. Based on 10% criteria, C, D, and E are reportable. Segments which are identified as reportable based on 10% criteria will be checked for total external revenue to external revenue from reportable segments basis. If it comes to 75 or more, good. If it doesn't fulfill 75% criteria, though A and B are not contributing to 10% of the revenue, though A and B are not contributing to 10% of the revenue, still A and B will be identified as reportable segments, not based on 10% criteria, but based on 75% criteria. Okay? Did I answer your question? Akko, respond. First she sent one message, she retracted it, then she again sent one message. Now I've answered. Now I'm waiting for reply. Guys, leave faculty in scene zone. Ask doubt. When we reply, no reply. This is not cool, bro. Okay, anyways, come on, next one. First total revenue 40 by 745 into 100. Hey, should I write that 40 by 745 into 100 or is it okay? Next one 65 by 745 into 100. 120 by 745 into 100. How about 150 by 745 into 100? 20.13. 370 by 745 into 100. 49.66. Done. Now tell me which of them are reportable based on percentage criteria. 5.37. Not more than 10. 8.72. 16. Yes. 20. Yes. 49.66. Yes. So which of them are our reportable segments based on 10% criteria? C, D, and E. Now we'll check 75% criteria. No, we will check. You have checked. I have not checked. So take only external revenue. Forget total. Forget internal. Do 80 by 160. 50%. How about 10 by 160? Very good. 20 by 160. Very nice. Total is how much? 50 plus 6.25 plus 12.5. I can do it one more way. Take 80 plus 10 plus 20. 80 plus 10 plus 20. 110. 80 plus 10, 90. 90 plus 20, 110. 210 divided by 160. 68 point. You can find it like that also. 68.75% is less than 70, less than 75%. Am I right? It is less than 75. But minimum external revenue from reportable segment should be 75. But from C, D, and D, you're getting only 68.75. What do I have to do? Among A and B, I have to pick one of the segments as reportable. Is it A or B? One among A and B. We don't know. It can be A, it can be B. I'm not telling you it has to be A. I'm not telling you it has to be B. Can be A, it can be B. It has to be picked such that total external revenue from reportable segments become 75%. Read the conclusion. Management by discretion to pick one among segment A or B as reportable segment to make percentage of reportable external revenue to 75%. Are you getting it? Happy everyone? Fifth one. How many of you had already done before me and had got the same answer? Very good. Shabash. Copy. Next we have sixth one. Okay. Okay. That is something new also again. One more new point. In September 2025, recently concluded examination, there was a question from this chapter, this unit, segment reporting. First question. I will not be doing it. You will be doing it today. Little later. ನಿಮ್ಮ ಕೈಯಲ್ಲೇ ಮಾಡಿಸ್ತೀನಿ. ಚಿನ್ನು ಹೇಳು ಏನಾಯ್ತು? What's your name? ಗುರು ಕಿರಣ್ ಏನ್ ಗುರು ಸಮಾಚಾರ? This is the wrong time to have the name as Chinmay. Chinno, no. One guy is there. Chinmay is name. Chinno ಆಗೋಯ್ತು ಅವನ ಹೆಸರು. Everyone in the like, hey, Chinno, ಇವನು ಇದಾನಲ್ಲ Chinno. That one, everyone. Everyone owns his name now. Okay, we have a question. Sir, why we haven't did external percentage for A and B? Because A and B are not reportable. See, 5.37 and 8.72 alva. Don't you think it should be more than or equal to 10%? Maheshwari, what Mahi? Don't you know it should be more than or equal to 10? Hmm? 7 is lesser than 10. Mahi, did you understand? Sir, what is both A and B is not enough. Very good question. Dikshita is asking, sir, what if we take A and B? Still it doesn't come to 75. ಅಲ್ಲಮ್ಮ ಟೋಟಲ್ 100% ಅಂದ್ರೆ if you take A, B, C, D, it should come to 100 ಅಲ್ವಾ? So 100 will come. Mathematics, if not, mathematics will become incorrect. Check, yeah. Help me with this, okay? Take calculator, do 30 plus 20 plus 80 plus 10 plus 20. Divided by 160, if you do it will become 100%. That total only is that, no. You understood, no? Mathematically. And Dikshita, don't feel bad. I am not trying to make fun of you. This is not the first time that this kind of question has come in class. These many times students have asked same doubt. Because when you start applying accounts, no mathematics logic, you forget. That total is 100%. It has to be 100%. Got it? Sir, my name is Dikshit. Oh, sorry, Dikshit. Sorry. Sorry. Gender change. Nane doctor. By mistake, yeah. By mistake, ಅಷ್ಟೇ. Dikshu, sorry. ಬೇಜಾರ್ ಮಾಡ್ಕೊಂಬೇಡ. No hard feelings, bro. Can we go to next one? Okay. ಹಾ.
ಅದೇ 68% ಇದೆ ಅದಕ್ಕೆ ಇವಾಗ 75 ಮಾಡ್ಬೇಕು.
ಹೌದು. See, we are accountants. We only tell you should identify one more segment. We will not identify the segment. We are not management.
Eligibility criteria.
We won't do. We will tell them. We will tell the management. See, pa, it is 68.75. ಹಿಂಗಾಗಿದೆ ಏನೋ ಹೇಳಿ ನೋಡೋಣ. You identify one among A and B. We will give the option to them. We will not decide. Who are we to decide? Their business. After all, accountant. I will only tell you whether there is profit or there is loss. I will not tell you you should shut down business. I will tell you if you continue business, you will die very soon. I will tell information, but the decision is in their hands. Accountants are not decision makers. We will provide the information to the decision maker to take decision. But do we take decision? We will tell there is shit. If they tell no, I will eat. Let them eat. I am not going to stop him. I am going to tell him what will happen. Are you getting it? Do accountants take decision? No, we will provide them with information so that they can take right decision. Say something. Very good. Come on, let's go to the next one, shall we? Next one is going to be another interesting condition. Interesting question. So here we have again internal, external percentage. Based on this, instantly you can identify. Am I right? Come on, sixth one. Let's do what we know. He should not delete message like that. He sent a message. Before I can read, he retracted the message. You also do that. No, you want to tell hi to that friend, but you don't want to be the first one to tell. You tell something and then you delete it. Now that person opens the message. They are full curious. What happened? What? They will ask what? You like nothing. Like I tell what? It's okay. It's okay. It's okay. Fine. Leave. Nothing. Then why did you first text? Okay. Do it now. What did I do? 30 by 160 or 40 by 745? First to 10% criteria. Total revenue 40 by 745. What do we get? Do into 100. 5.37%. Again do 65 by 745 into 100. Fast ಆಯ್ತಾ? 120 by 745 into 100. Okay, 150 by 745 into 100. How about 370 by 745 into 100? Everybody detail here. Can I identify the reportable segment based on 10% criteria now? Segment A, reportable, not reportable. Segment B, not reportable. Segment C, reportable. Segment D, reportable. Segment E, reportable. Do you understand this? Yadu? Oh, segment B is not reportable. Why? 8.72 is less than. Welcome to Accounting Standard 17's new rule called as continuity principle. What is a new rule? We saw turnover condition. We saw result condition. We saw asset condition. Recently, we also read 75% condition. External revenue from the reportable segments should be equal to 75%. If not, identify such additional segment as reportable. New condition. What is this new condition called as? Continuity principle. What is it? Continuity. Everyone should tell you. Open your mouth. Continuity. Stop writing. Stop writing. Understand. If I've given the printout without answers, I could have given the book with answers also. So the point is not copying. Point is understanding. If you understand, even if you don't copy, you can go home and write. If you have not understood, even if you copy, it's of no use. So you are here to understand, not to copy. So don't be in a race to copy the notes. I will give you time to write. Listen and understand patiently. Please. Will you do this? Okay. Now, help me understand this. The new condition for accounting standard 17 is called continuity principle. What does it say? If a segment is reportable in the previous year, I'll tell the rule in simple language and then I'll complicate it. I'll tell you the easiest way to remember. First, if the segment is reportable in previous year, the segment will be reportable in current year also. I'll repeat. If the segment is reportable in, the segment will be reportable in very easy. If a batsman he was there in the team last series, he will be there in this series also. He'll be taken to this team also. Am I right? Akka, provided in the last year that person was there, that segment was there based on performance, turnover, result, or asset. Last time only if it was there because of continuity principle. Once more, you cannot put based on continuity principle. You did not understand. Let's say Australian series happened recently. Australian series, there was one batsman or one player picked. That batsman batted really well or bowled really well or fielded really well. Performance is great. For South African series, he is picked. Okay. What if that batsman or bowler was picked to Australian team, Australian tour, not because of he was performing well, because on continuity principle he was picked. The before Australian series, whatever series was there, in that he had done well, so it was picked to last time Australian tour. In Australian tour he didn't do well. Just because he was there in the Australian tour, will be there in South African tour. No. Continuity principle will apply for once, not for more than once. Last year, turnover was more than 10, or asset was more than 10, or result was more than 10. Last year reportable. This year also reportable. Irrespective of the fact whether turnover, asset, or result is more than 10. Last year reportable based on turnover. This year also reportable even if turnover is less. But next year will it be again reportable? No. Why? This year we already used the continuity principle card. We cannot use it next year. So for every entity which becomes reportable, I will give you one card. What is that card called? Continuity principle. Even if you don't do well, next year you're still reportable. The year after that, can you still continue? No. You need to earn that card second year. And then you can use it third year. You earn that third year, you can use it fourth year. If you used it once, next year again you don't have the card. You are not reportable. You will not be reported separately. Another new segment might become reportable. Are you getting it? Read the line given here. Segment B was reportable in previous year based on turnover condition. Segment B was reportable segment last year because its turnover was more than 10. In the current year, though its turnover is 8.72, still it is reportable. This reason is continuity principle. These reasons is revenue. C, D, E is reportable based on revenue, but segment B is reportable based on continuity principle. Everybody understood this? Now I'll check for 75% condition. Now I'll check for 75%. What is 75%? External revenue from the reportable segment should constitute 75%. External revenue from the reportable segments should constitute how much? 75%. Take 8.72, sorry, 20 by 160. Why am I not doing it for A? Because A is not reportable. 12.5. Do 80 by 160. 50%. 10 by 160. How about 20 by 160? Now take the total. What do we get? 81 point. Everybody understood 81.25? I want you to do it one more way. Take the total, yeah. 20 plus 80 plus 20 plus, sorry. 20 plus 80 plus 10 plus 20. 100 plus 10, 110 plus 20, 130. 130 by 160. 81.25? Is it more than 75%? Should I identify one more segment that is A as reportable or no need? No need. Only B, C, D, E are reportable. Only B, C, D, E are reportable. Understood? B, C, D, E are reportable. Say something. Come on, copy. I've given one Nenapirali there. What does it say? Continuity principle as per para 31. What does para 31 say? Segment reportable in previous year based on 10% threshold. Reportable in current year also, even if it doesn't fulfill 10% threshold. Copy quick. Dikshu, did you understand? Akila, Manoj, Spurti, Rishabh, are you guys there? Rakshit? Rakshit has friends here. How do you know Rakshit? Was face to face and then shifted online. One more Rakshit. Rakshit. ಕಾಣಿಸ್ತಾ ಇಲ್ಲ. Oh, Rakko. On right side. How about Aparajita? Not there only in the chat box. We go to have breakfast. Can we go to AQ7? Everybody understood this? So what is continuity principle? If a segment was reportable in the previous year based on turnover result or asset criteria, it is reportable in the current year also, though it doesn't fulfill turnover result or asset criteria. Okay? Everybody understood? Very good. Nice, yeah. Come on, let's now go to AQ7. Hey, is it fast? It is not. Focus on AQ7. We did one question on turnover. We did one question on profit. We did one question on asset. Now we are going to do a question which has turnover, profit, asset all in one. Fantastic, no? All the three categories are there in one only. You saw Iron Man. You saw Captain America. You saw Thor. Now all of them together have come in one movie, Civil War. Multi-starrer movie. Shivanna, Rajini, and then Upendra, all in one movie. Shall we do this? Okay, first, what to do? Just write the data, whatever they've given. I will solve, okay? I want you all to focus. A, B, C, D, E. Turnover. Shall we do turnover first? 10 by 485. 2 point. You will tell me if I'm going fast. Please do 45 by 485. Then do 40 by 485. How about one more 40 by 350? Sorry, 280, 485. Same. Last one, 350 by 485. So I've written all turnover based percentages. Don't write. Wait. Don't write. Wait. Or you write. After that, I'll explain. When I am doing, you should see. Later you do, I will see. When I am doing, if you're also doing, you don't see what I'm doing. Then once you go home, you don't know how to do. Then you will open search how to do segment reporting questions, and then you see someone else doing on YouTube, and you learn from them. No, please see, observe, keep pens down, everyone. If you want to hold something in hand, it should be calculator, not pen. Now, next we'll do profit. 5 by 135, 20 by 135, 80 by 135, 10 by 135, 20 by 135. Percentage of result is also done. Lucky you people, there is no profit loss both, there is only profit. Because in this question, I'm not trying to teach you that profit loss. I'm trying to teach you something new. Come to next one. Asset 10 by 410. Okay, 30 by 410. 50 by 410. Everyone should answer. 12.2. 20 by 410. 300 by 410. 73.17. We have everything. I'll repeat. A segment to be called as reportable segment, it has to fulfill turnover condition, result condition, or asset condition. It is or by management discretion. Next thing that I taught you is continuity principle. If a segment was reportable in previous year based on turnover, result, or asset, it will become reportable even in the current year, in spite of the fact that its turnover, result, or asset is not crossing 10%. Am I right? I told you one more point. Out of all the reportable segments, we will check the external revenue percentage. All the reportable segments together should contribute to minimum 75% of external revenue. If it does, good. If it doesn't, then we have to identify another segment as a reportable segment. Clear? Check now. Is this segment A reportable or not reportable? 2, 3, 4. All the three not fulfilled. It is actually not reportable. Read the question. Segment A was reportable in previous year based on asset criteria. Because it was reportable in the last year, it will become reportable in current year. Segment A is reportable. Sir, but its performance is bad. Doesn't matter. Still reportable in current year. Why? Because of last year. So what is the reason? Continuity principle. What is the answer? Continuity. Very nice. Come to second one. Segment B. 9.28, 14.81, 7.32. Reportable, not reportable. What is the basis? Percentage of profit. That is result. T R A M is the basis. T turnover or sales. R result, profit loss. A asset. M management discretion. 8.25, 59.26, 12.2. Reportable. Basis result and asset. Two conditions it has fulfilled. How about segment D? 8 less than 10, 7 less than 10, 4 less than 10. Not reportable. But they've given one condition here. Segment D was reportable in the previous year. Is it reportable now? No. Sir, but it is reportable last year only. It was reportable based on continuity principle. Last year, bandirode dot vishya. Last year, it becoming reportable itself is big deal. It had not fulfilled criteria last year. Last year, Ayo Papa, we gave one chance. This time also, if you don't perform, no, not reportable. Are you getting it?
Yes, sir.
Yeah, this is not reportable. No reason. If we say yes, there is a reason. No means no. Why do you like me? 100 reasons I can tell. Why do you not like me? I don't like you. Don't ask for reasons. I don't like you for the fact that you are asking reasons only. When someone says they like you, talk more. Ask them why. If someone says they don't like you, don't talk. Don't ask why. You will only be hurt more. Already you are hurt. Why do you want to be more hurt? They will tell, I don't like the way you look. I don't like the way you eat. I don't like the way you talk. You are disgusting. Why? Yeah. Why? Turnover 72. Oh, yeah. Profit? Yeah. Asset? Yeah. Yeah. What is the reason? All three. What do you like in me? Everything. Everything. Copy the answer. Quick. If they say they don't like you, then don't ask them what you don't like in me. Like everything. Mm-hmm. That way, to say, such kind of interesting character was Jeevan last batch. Whoever want any help, advice, tips, everyone is to go to Jeevan. Photo only, you might have seen. Cameraman. Good guy, no? Full famous. Jeevan. They're all coming in the evening today. You can meet them if you want. No, you don't want to. Sure, I'll tell them that you don't like them. Understood AQ7? How many more do we have? Is this the last one? Very good. Then we'll run through the theory once. Little bit of it is left. Then we'll switch to questions from the material. Did everyone finish this? Very good. By this, we're done with AQ7. Anyone still writing? Anybody still writing? Nobody? Welcome back to the theory part. So far, what have we understood? We've understood business segment. We've understood geographical segment. We've understood when is it reportable. I taught you the 75% criteria. I taught you continuity principle. Next, we have single reportable segment. Single reportable segment. There are 5-6 segments based on turnover, based on result, based on asset. When you identify, only one segment is becoming reportable. No other segment is even coming to 10%. Then you check the external revenue criteria. Based on external revenue, also only one segment. Because that one segment is contributing to more than 75% of external revenue. Continuity principle hakanandre, last year no other segment was reportable other than this. Or some other segment which was reportable was already based on continuity. Even by continuity principle, no segment is reportable this year. Single lagidrenu, odrenu. They will say no reportable segment only. No one did do segment reporting. Are you getting it? If it is only one segment, should you do reportable segment? Should you do segment reporting? No need. No need. If it is only one segment, should we do segment reporting? No need. That's what A17 says. See, no need to report if only one segment is reportable. Read, yeah. No need to report if only one segment is reportable. To do segment reporting, there should be minimum 2 segments. If one segment is reportable based on the criteria, management feels one more segment should be reportable, though it doesn't fulfill turnover result asset criteria. Can you do segment reporting? Yeah. But if management also doesn't feel like doing any other segment as a reportable segment, then don't do segment reporting. Ignore this complete standard. This standard is not applicable. Are you getting it?
Yes, sir.
So to do segment reporting, there should be minimum. If it's only one, no segment reporting. Are you getting it? Yeah. Now when we spoke about revenue here, result here, asset here, what is included, what is not included, will what we'll learn now. Segment revenue will include all directly attributable revenue, allocated revenue, and inter-segment revenue. But it will not include extraordinary revenue, interest income, dividend income, profit on sale of investments. These are not to be considered. If you sell some asset, you get some profit. If you sell some investment, get some profit. That is not considered as revenue. Revenue means sale. Revenue means sale, not of assets, but of inventory. If you receive dividend income, that should not be considered because that is for the entire company as a whole. That doesn't belong to a single segment. So we should not take indirect income like dividend, interest, and profit on sale of investments. We should only take directly attributable revenue. You don't have any questions on this, but I hope you understood. Say something. What about segment expenses? That's it. Same normal operating regular revenue operating expenses should be considered. We should not consider extraordinary expense, interest expense, loss on sale of investments, income tax. All of that will not be considered. And I have 4 segments. I've incurred some administration expense, not for any of the segments, but for the entire company as a whole. That expense is not considered. If I've incurred expense specifically for that segment, consider. If I've incurred expense for entire business as a whole and I cannot allocate it to any segment, don't consider. Ignore in profit computation. And when we tell assets and liabilities, no, we will ignore tax assets and tax liabilities. If you have deferred tax asset, deferred tax liability, advance tax paid, provision for tax created, all of these tax assets and liabilities are ignored. We only considered operating assets, directly attributable assets. Okay? Say something.
Yes, sir.
And I've given you some data regarding disclosure requirements. This used to be tested in theory in the past, now not required, but I've just given it. Read through the same thing once. When you prepare segment report, you should show how much is revenue from that segment, assets from that segment, liability from that segment, profit from that segment. Everything should be shown separately. That's the only point of this entire discussion. Last pointer that I wanted to tell, picking whether to do based on geography or to do based on the product is an organization's choice. It's my organization, my choice. I can do it based on product or I can do it based on place, my choice, geography or product. What if I tell both are important? Then draw a matrix. Here you did location 1, location 2, location 3. Here you did product 1, product 2, product 3. You do both. One keep y-axis, one keep x-axis and draw both. Matrix type. Lot of entities do both. Lot of entities do both. A simple homework for today for all of you. Pick a company, a public company, listed company. Download their segment reporting and then see through what is there, what is disclosed today. Pick any company of your choice, whatever company you are most excited about. Pick that company and search for their segment reporting. In their financial statement, what they'll release for the press, what they'll upload it on the website, no, in that segment reporting will be there. We will analyze one company segment reporting tomorrow. So will you pick one company segment report today, download it, download the PDF, and then check once. Segment report will not be given separately. It will be part of your full financial statements. I want you to search where is the segment report in that. Control F and then segment report. Identify, observe and analyze, and then come back to class tomorrow. If you have really nice, interesting observations, mention it to me in the class tomorrow. We'll actually open that company and then see. Is that okay? Fine. Will you people do this? Very good, guys. By this, we've finished accounting standard 17, one of the cute, sweet little standards. Now we'd have to practice a lot of questions on this. Let's get into question practice. Open your AS book. Welcome back, everyone, to accounting standard 17. We've done theory, we've done AQ, we've done concept, and in this video, we'll do problem practice. To start with, we have series of questions. We have two series of questions. Question series 1, question series 2. Question series 1 is all theory. Question series 2 is identification of reportable segment. We'll start with segment 1 and then go to the second segment. Begin, yeah. 1.1. What does 1.1 say? Define business segment, define geographical segment, define reportable segment. In the AQ book, the initial chart is there, the definition is there. How do we decide? Oh, sorry, what is a business segment? Based on the product or the service, if we identify it as a distinguishable segment, if the risk and reward varies based on the product or service, then it is business segment. What about geographical segment? The risk and the reward varies from the geographical location or economic environment in which the business is done. Then that will become geographical segment. What is reportable segment? Reportable segment is a business segment or a geographical segment from whom the turnover, result or asset is greater than or equal to. Lastly, M, management by its discretion can identify any segment as reportable segment. These kind of questions used to come long ago, but starting from May 2024, 30 marks of your paper has been made as MCQ. Am I right? 30 marks will be MCQ, 70 marks descriptive. So in the 70 marks, there is very less space to ask question from every standard, and there is no space for this kind of descriptive theory answers. So they have stopped asking this short note question. What is business segment? What is geographical segment? No, because previously there used to be two papers of accounts, 100 marks, 100 marks. Accounting group 1, 100 marks. Advanced accounting group 2, 100 marks. Now both of them have become together 100 marks. So there is so much to ask for such less marks that so many things will get skipped. Are you getting it? Did you understand 1.1? Yeah, I'll share the PDF with answers. In that, anyways, answer would have been typed. If not, also you can see that initial theory. In that, the answer is there. Can I say 1.1 is done? Can we go to 1.2? 1.2 was asked in CA intermediate, but not in accounts paper, but in audit paper in November 2007. Look at the question. Alagar Limited is a company engaged in business of chassis building. Chassis is the skeleton of the bus, skeleton of the vehicle is there, no external body. That is called as chassis and bus transportation. So they do two things. One, they build the chassis. Second one, they also give transportation service. So that is based on the business product. It is two different segments. Do you agree with me? Chassis building is a separate segment. Transportation is service. That's a separate segment. If they have to do segment reporting, identify those two as business segments. Let's see. Accounts for all expenses and incomes in P&L under various heads. The auditor of the company requires that P&L account should depict the profit or loss from the business of assembly as well as operation of the buses services separately. What is your comment on it? As per accounting standard 17, if both of them are reportable segments, then they should be reported separately. If both the segments are not reportable, then there is no need to do separate reporting. They are segments, correct, but are they reportable segments? We don't know. How do we decide? Based on turnover, based on result, based on asset, based on management discretion. If we identify them, then we should do reporting. Otherwise, no need. Are you getting it? Yes or no? Write a short answer there only. Write a short answer. Okay, here also we can write a short answer. For a business segment, what is a short answer? Based on product. Yes, based on product or service. Based on product or service. Geographical segment, economical, based on economical environment. Reportable, ERAM. Correct alva? Greater than or equal to 10%. Short answer. This you don't have to write, read, and revise. This you already know. I'll tell you the questions what you should write, read, and revise. Done. Come to 1.2. Here, what is the answer that we're going to write? Reportable, sorry. They are business segments. Are they business segments? Yes. Reportable if it fulfills conditions as per AS 17. If it fulfills conditions as per accounting standard 17, no, then it becomes reportable segment. What if it doesn't fulfill the conditions as per AS 17? Then it is not reportable segment. Then it is not reportable segment. Paka? Say something. Okay. Then Shubham Limited is a company. What does it produce? Battery. Battery for karu trucku. Sorry, scooteru karu trucku. And also battery to be used in inverter. How many segments should it divide it into and why? This is CA final RTP question under old scheme. I manufacture batteries. Where are my batteries used? My batteries are used in car, scooter, bike, bus, and all. And my batteries are also used in UPS at home. I should divide my battery business into two segments. Product for transportation vehicle use. Second one for domestic use. For domestic, that's the major classification. No? Is there any other classification that you can tell? Based on the risk and reward involved in the product. So what are the two segments that I can identify? Business segments. How many segments? Business segments, vehicle use and domestic use. Business segments are domestic use and vehicle use. Two segments based on the risk involved in the product. Everyone done? Come to 1.4. Again, final exam question, May 2007. Company has inter-segment transfer policy to charge cost less 10%. Inter-segment policy means within the business, from one segment, if you're transferring the units to another segment, within the business, from one segment, if you're transferring it to another segment, at what rate are you sending? You're sending it cost less 10%. If the cost is 100, no, when I give it to my own company's another segment, I'll give it at 90. But outside, I'm actually selling it at 125. Is the policy adopted by the company correct? My product, if I sell it outside, I'll sell it at 125. My cost is 100. Within the company, if I give it to another segment, I'm selling it at 90. Tell me, is it okay? See, who are we to tell what's right, what's wrong? We are only here to tell is it reportable, not reportable. You want to sell something at a lesser price, you sell. A17 did it tell anywhere it should be sold at cost or it should be sold above cost? Accountingly, there's a problem. I am not telling you what price to sell. Your headache, you sell however you want. I am here to tell is it reportable or not reportable. At what price do you sell is not my headache. A17 has no comments on this. No comments. Your choice. Your die, you die. A17 lays no restriction on transfer price. Suddenly, if you get this kind of question in the exam, it's a shocker, no? Because you don't know, don't remember reading anything. Be confident. There is no such condition by AS70. This series 1 questions are not important. You don't have to revise them the day before exam. If a question is important and to be used in revision, I'll make you put one star next to the question. So those questions you have to revise. Second time reading, you don't have to read any of 1.1, 2, 3, 4 questions. Can we go to second series? Second one is going to be interesting. This one you put one star. This is important question. We'll learn this. We'll do this question. Final exam question. When? November 2014. It was asked in final exam. Read. ABC Limited has 3 segments. A, B, C. Wow. Total assets is how much? 15 crores. Yena, Bina, Sina. Total A's assets plus B's asset plus C's asset is together how much? 15. 15. A desto 1.85. B 6.15. C 7. Check once. A 1.85 plus 6.15 plus 7. 15. Question is correct. Now, before we do 1.85 by 15, 6.15 by 15, 7 by 15, they're telling assets include segment assets, that is deferred tax asset 0.5, 0.4 and 0.3 for ABC. Deferred tax asset, should it be included in segment assets for the computation of reportable segment criteria? No, we read that point clearly. Exclusion selling. What was there? Tax should be excluded. Tax should be. Okay, help me with this. We are now going to do 2.1. What are the segments? So A, B, C. Total assets 1.85, 6.15 and 7. Together 15. Have they given this? Respond. How much is deferred tax asset of segment A? 0.5. Segment B, 0.4. Segment C, total 1.2. Total 1.2. Now from 1.85 deduct 0.5. 1.35. From 6.15 deduct 0.4. 5.75. From 7 you deduct 0.3. This should be considered for segment asset 10% criteria. Total ಎಷ್ಟಾಯ್ತು 13.8. Now do 1.35 by 13.8 into 100. 9 point. Not able to see the screen. Can you guys see the screen now? 9.78%. How about 5.75 by 13.8? 41.67. How about 6.7 by 13.8? 48.5. Now tell me, is this more than 10? No, not a reportable segment. Is this greater than 10? Yes, reportable segment. Is this greater than 10? Yes, so this is also reportable segment. So which segments are reportable? Segment B and segment C. Very important point. Deferred tax asset should not be included in the asset to compute 10% criteria. Eliminate tax assets and liabilities from the total assets and then compute the percentage to check if it is 10 or more. If it is 10 or more, reportable segment. If it is not, then it is not reportable segment. Copy quick. Read the conclusion as you write. And they've given one conclusion in the question, I guess. See, what are they told? Accountant of ABC Limited contends that all segments are reportable. Ante. Is accountant right? No. Based on asset criteria, only segment B and C are reportable. Maybe segment A is reportable based on management discretion or for the purpose of 75% criteria. But based on asset criteria, only B and C. Copy quick. Notebook. Notebook. You won't have space in the textbook later. For questions in the AS book, you have to write answer in a note. Online students, confirm if everything's fine and you can see it clearly. Everyone copied this one? Pakka? No doubt? Come on. Let's go to 2.2. 2.2. I asked you to try. If you've tried, good. If not, pay attention. Can I have your attention? Will you people please stop writing? Revenue 150, 200, 250, 300. I would write it. Segment revenue 150, 200, 250, 300. I've just written the data they've given exactly in the way they've given. Now I'll identify percentage. Shall we do percentage? 150 divided by 900 into 100. 16 point. 200 divided by 900 into 100. 200 divided by 900 into 100. 50 divided by 900 into 100. 300 divided by 900 into 100. That's it. We've done this. Okay. Then we'll not decide right now what is reportable, what is not. We'll finish all criteria. Then I have result 50, 70 loss, 80, 10, minus 25. So what do? I'll write result. I'll have two columns, one for profit, one for loss. A, profit of 50. B, loss of 70. C, profit of 80. D, profit of 10. C and D, profit 80, 10. E, loss of 25. Now we'll take separately total 50 plus 80 plus 10. 140. 70 plus 25. Now I would write percentage. First, I will take whichever is higher among these two. 145 and 95. Whichever is higher. 140. Everybody understood? Now, 50 by 140. 70 by 140. 50%. 80 by 140. 10 by 140. 25 by 140. You understood? 35.71, 50%, 57.14%, 7.14%, 17.86%. You understood all of this? Next, we don't write conclusion right now. We will write the asset data also, whatever is given. What is the asset data? 40, 65, 140, 20, 35. Write the same thing. 40, 65, 140, 20 and 35. Take the total 105, 245, 265, 300. Now percentage of segment asset. 40 by 300. 65 by 300. 21.67. 140 by 300. 46.67. 20 by 300. 35 by 300. Have it all. Now I'll tell the conclusion as to which segment is reportable, which segment is not reportable. Is segment A reportable? 16.67, 35.71, 13.33. What is the reason why it is reportable? All revenue, result, asset, the condition, whichever condition you see, it is reportable only. Shall we see B? 22.22, 50, 21.67. Reportable, not reportable? Reportable. What is the reason? All the conditions has been fulfilled. Segment C, 22.22, 57.14, 46.67. Is it reportable? Yes. What is the reason? All. How about segment D? 5.56. Oops. No. 7.14. Oops. No. 6.67. No. Is it reportable? But just check if they've given some information about previous year, something or like that. Check once before you write conclusion. Have they given? So it is not reportable. There is no reason why it is not reportable. If it is reportable, we can quote a reason. Am I right? Then segment E, 33.33, 17.86, 11.67. Reportable, not reportable. What is the reason? All three. That's it, yeah. We've come to the conclusion. Have they given us external revenue, internal revenue? If they had given, then we could have checked for 75% criteria. Can we check? We could have. We could have. Now we can't. If you want, you can check now. Okay, do this. 150 plus 200 plus 200 plus 300. What do we get? 8. A, B, C and E revenue. You took no. Divided by 900. 94 point. Is it more than 75%? Yeah. So you don't have to apply that. They have not asked. I still told you how to check. That's the reason. I have written one conclusion also. On non-availability of information, if we assume revenue mentioned in the question is only external, then if I compute, it comes to 94.44%. As it is greater than 75, there is no need for identification of any other segment as reportable segment. There is no need to identify any other segment as reportable segment. Got this? Say something. That's it, yeah. We're done. 2 point. Copy quick. How many of you already done and then you got the same answer? Very good. Copy, copy, copy. 2.3, is it similar? Whoever has done can try 2.3. Whoever has not, copy 2.2. Table I thought. Write a table and then I'll show the conclusion. I'll show conclusion for everyone to write. Don't worry. First write the table, then we'll write the conclusion. During the previous class also used to sit in first row. You're sitting somewhere behind. Oh, that old batch students were sitting. They didn't give space. Anymore, your batch and that batch will not get combined. You can sit where you want. First bench will be first bench for you. One of you used to get to sit in first 2, 3 rows. 4, 5, 4th row or 5th row. Hmm. But you still know their names. People watching it live online, do you understand? Respond, people. Tell something. Can I scroll down to conclusion? Can I? Write the conclusion also. Don't miss. This is 2.2 or 3. You have till 2.8. 5. Can I start with next question? Tomorrow calculator. Get more number. You can write it here. See, getting a book is mistake number one. Not writing it is mistake number two. You are not writing conclusions. This is nothing is a conclusion, no? You can say it next time, huh? Again, continue. ಹೌದಾ ಪೆನ್ಸಿಲ್ ಪಾಕ್ ಅದಕ್ಕೆ ಸರ್ಪ್ರೈಸ್ ಇದೆಯೋ ರೈಟ್ ವೇಟ್ ಅಂತನಾ ಬಟ್ ಎಕ್ಸಾಮ್ ರೈಟ್ ಪೆನ್ ಓನ್ಲಿ ರಿಮೆಂಬರ್ ವೆರೈಟಿ ಸ್ಟೂಡೆಂಟ್ಸ್ ಐ ಗೆಟ್ ಟು ಮೀಟ್ ಡೋಂಟ್ ಬಿ ಸ್ಕೇರ್ಡ್ ಸಿ ಒಬ್ರು ಮಾತಾಡಿದ್ರೆ ಹೇಳ್ಬಿಡ್ತಾರೆ ಇನ್ನೊಬ್ರು ಕ್ಲಾಸಲ್ಲಿ ಪೆನ್ಸಿಲ್ ಅಲ್ಲಿ ಬರ್ತಾರೆ ಇನ್ನೊಬ್ರು ಬರೆಯೋದೇ ಇಲ್ಲ ಇನ್ನೊಬ್ರು ಅರ್ಧ ಆನ್ಸರ್ ಬರೀತಾರೆ ಇನ್ನೊಬ್ರು ಅವ್ರು ಇಂಗ್ಲಿಷ್ ಅಲ್ಲಿ ಬರೀತಾ ಇದ್ರು ಇವನು ಗೊತ್ತಾಗಲ್ಲ ಲೈಕ್ ದಿಸ್ okay let's go to the next one 2.3 what's happening in 2.3 Tirumala Limited they've given some data revenue profit or loss as well as asset easy one segment revenue how much 9,600 300 100 total 9,600 plus 300 9,900 plus 100 10,000 to 9,600 by 10,000 96% 300 by 10,000 3% 100 by 10,000 1%. Don't come to conclusion. Result will identify profit and loss separate but easy. All three are profit. 1750, 180, 70. Right, 1750, 180, 70. 2000.
87 point.
Profit or loss, whichever is higher. Loss is 0. Whichever is higher is 2000 only. Percentage will be 1750 by 2000. 87.5. 180 by 2000. 70 by 2000. Don't come to conclusion. Don't tell which is reportable, which is not. Wait. We will finish the next one also. Asset 4100, 450, 450. 5000. Now please do 4100 by 5000. 82. 450 by 5000. 450 by 5000. 9. Now you tell me reportable. A. Yes. Based on all the conditions. All the conditions is fulfilled. B. No, no, no. All three conditions, no. Segment C, no, 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 not reportable. So which segment is reportable? Do you remember something? Single. What single? What? No need of living in this life. Why? Because you are single. Wait, you're still young. You'll find someone someday. Oh my God. In fact, if you can't, because you are a CS student, if you can't find anyone, don't worry. Institute is there. They're creating one matrimonial.com only for CS. So institute knows that you've given away so much of your youngster life in the course that later it is difficult to find the partner. I say, well, don't worry, I'm there. No, I'll find one more chartered accountant for you. Yeah, I'm not kidding. It's true. You should say thank you to institute. Yeah. So single segment principle. What does it say? Disclosure of segment information is not required if there is only one segment which is reportable. If there is not more than one segment. Are you getting it? Say something. Based on, we don't know this revenue condition and we don't know external revenue. But if you assume that total segment revenue is external, 96%, which is more than 75%. So their external revenue conditions also we don't have anything. However, management by discretion, if it picks B or C as reportable, then okay. Otherwise, only A will be like, there is no need of segment reporting. I've given conclusion also. Will you copy this? Sir. Fatafat, copy. Quick. Copy the answer, then copy the conclusion. Rishabh, correct. Single segment. Let me know if you're done. I'll show the conclusion. Done with the table?
Yes, sir.
Anyone copying the table?
No, sir.
How many of you are copying the table? Raise your hand. Okay, 1 minute. Copy quick. I'll give you a minute. A minute to win it. Done? Can I scroll down to conclusion now? Write it in detail. Whoever has finished writing can try 2.4. We have 2.4 and 2.5. Two more questions in AS70. People are watching it online. Did you write conclusion? Did you understand? Sir, if there is additional information, okay, related to continuity concept, then do we consider to prepare reportable segment? Yeah. Yes. In that case, we'll do segment reporting. If they give based on continuity principle any other segment as reportable, then based on that we will do segment reporting. Everybody, are you with me? Can I go to 2.4? Did you finish writing conclusion? Make some noise. ಕೇಳಿಸ್ತಾ ಇಲ್ಲ. Louder. Today I'll not leave the class till 2 o'clock. Because you people are so quiet, I'm so happy. I'll continue. We'll start one new standard. Respond louder. Okay, all of you have agreed. So I'll extend the class till 2. Chief Accountant of Govind Limited gives you the following data regarding 6 segments: MNO, PQR, asset, result, revenue. Fine. If you have finished this, good. If not, good. Stop writing. Stop writing. Please look at the board. MNO, PQR. Can I say segment assets is given to us in the question 40, 80, 30, 20, 20, 10? Percentage. 40 by 200. 20%. 80 by 200. 40. 30 by 200. 20 by 200. 20 by 200. 10 by 200. Don't conclude. Come to the next information. Segment result. Segment result, I would write profit and loss separately. M, profit of 50. N, loss of 190. O, P, have 10 and 10 profit. O, P, 10, 10 profit. Q, loss of 10. R, profit of 30. Is it fast? Okay. Then check the total of the profit. 50 plus 10, 60. Plus 10, 70. Plus 30, 100. Correct? Then loss 190 plus 10, 200. That's calculation. Take 100 or 200, whichever is higher. 200. Now please keep 200 as a constant denominator. 50 by 200. 190 by 200. 10 by 200. 10 by 200. 10 by 200. Sir, but this is profit, this is loss. That plus or minus symbol, you leave it at home. That's not relevant here. I made you do an AQ also on that. Remember, plus or minus doesn't matter when you're doing percentage for result basis in segment reporting. Last, 30 by 200. 15%. Sir, conclusion, not right now. Wait. One more is there. Revenue. 300, 620, 80, 60, 80, 60. Write the same. Now we'll do percentage of revenue. 300 by 1200. Very good. 620 by 1200. Nice. 80 by 1200. Very nice. 60 by 1200. Much better. 80 by 1200. This 60, no, already we have done. Fine. Now check the basis here. 20, 25, 25. Reportable. Yes. Basis. All three. 40, 95, 51. Reportable. Yes. Condition. All. 15, 5, 6.67. Reportable, but based on asset criteria. Based on, how about P? 10, 5, 5. Reportable, based on asset criteria. Q, reportable based on asset criteria. 10% here. R, not reportable based on asset. Reportable based on result, not reportable based on revenue. So basically it is reportable because even if one condition is fulfilled, it will be considered as a reportable segment. Based on what criteria? Result. That's it. What is their contention? Chief accountant is of an opinion that M and N alone should be reported. Is he right? No. M, N, O, P, Q, and R. All the segments are reportable. So the contention of the chief accountant is incorrect. It is incorrect. That's it. Come on, fatafat you do. Last or next to 2.5. Oh. Would you want to try by yourself? Is there anything brand new in that you don't know? Is there anything very new? No. Will you try? Come on, fatafat, do this and then do that. Copy this and then do the next one. Shall I do 2.5 Abhirakshit Limited? How many of you already finished? Nice. Should I only show the answer or should I solve? Oh my God, so much of data. External sales, internal sales, total sales. First, write the external sales and internal sales data. And then we will identify total sales. Shall I do total revenue? 200, 630, 90, 30, 30, 100, 50, 70. Together 1200. Now do the percentage. 200 by 1200, 16.67. 630 by 1200, 50.250. 90 by 1200, 30 by 1200, 30 by 1200, 100 by 1200, 50 by 1200, 70 by 1200. Don't take conclusion. Come to the next part of the question. They have given profit loss together. We will segregate, shall we? Profit loss. A, profit of 10. B, loss of 180. C, profit of 30. D, loss of 10. E, profit of 16. F, loss of 10. G and H, 10 and 14. Take the total of profits. 10 plus 30, 40, 56, 66, 70, 80. And then loss, 180 plus 20, 200. Whichever is high, 200. 10 by 200, 5%. 180 by 200, 30 by 200, 10 by 200, 16 by 200, 10 by 200, 10 by 200, 14 by 200. That's it. Next, come to segment assets. Segment asset 45, 141, 15, 33, 9, 15, 15, 27. Just write the data 300. No percentage. 45 by 300, 141 by 300, 15 by 300, 33 by 300, 11, 9 by 300, 15 by 300, 15 by 300, 27 by 300. I hope it was not very fast. You've done so many questions. This becomes so easy, light. So I tried to do it slightly faster. Now we'll write conclusion. 16.67. Yes. 5. No. 15. Yes. Answer is yes. Reportable. Based on revenue and asset. Result basically it's a no. Don't write all. It is result and asset. It's not difficult. So don't do wrong. Then B, 52, yes. 90, yes. 47, yes. So it is reportable based on all three conditions. Don't take impulsive decision. Please check it line by line. Difficult question if you do something wrong, it's okay. Justifiable. Question was difficult. Easy question if you do wrong, you will feel humiliated. If the mainstream fast bowler bowling at 150 kilometers per seat gets you bowled, okay, yeah, face bowler. Some off-time, or say part-time bowler comes for the first time bowling in the last 3 years, 4 years, bowls ever, should not get out. Should be careful. You understand? Focus. 7.5, no. 15, yes. 5, no. Ultimately, answer is yes. Result is the basis. D, 2.5, chichi, no. 5, no. 11, yes. What is the basis? Asset. E, 2.5, no. 8, no. 3, no. Basis? Yes, sir. Yes, sir. Actually, it is no, but it can become yes based on some other criteria. Let's see if they given anything else. Identify which of them are reportable segments. If you are informed that A, B, C, and E were reported in the financial year, last financial year. So E is actually not reportable in current year based on turnover result asset, but it will now become reportable based on continuity principle. What principle? F, 8, no. 5, no. 5, no. Was it reportable last year? No. So it is not reportable now also. You got it. Basically, E is working on nepotism. Alva? But A is also nepotism. B also nepotism. But they are doing good also. C, nepotism. D ಇದೆ ಅಲ್ವಾ ಮಧ್ಯದಲ್ಲಿ. D is like ಬಡವ್ರ ಮಕ್ಕಳು ನಾವೆಲ್ಲ ಏನ್ ಮಾಡೋದು? ಮೆರಿಟಲ್ ಬಂದಿದ್ದೀನಿ. ರಿಪೋರ್ಟೇಬಲ್ ಸೆಗ್ಮೆಂಟ್. ನಮಗೂ ಸ್ವಲ್ಪ ಮರ್ಯಾದೆ ಕೊಡ್ರಪ್ಪ. Then G, 4.17, no. 5, no. 5, no. Reportable, not reportable. Not reportable. H, 5.83, no. 7%, no. 9%, no. Reportable, not reportable. We have forgotten something. We need to check external revenue criteria to see if minimum 75% is reported. If it is yes, good. If not, what to do? Identify one among FGH as reportable segment to take it up to 75. Shall we check that? Everyone help me. How much is external revenue from reportable segments? 0 plus 510 plus 30 plus 20 plus 30. How much is 0 plus 510? 510 plus 30, 540. 540 plus 20, 560. 560 plus 30, 590. Denominator will be 800. To 590 by 800? 73.74. You're almost so close, yeah. 73.7, it's not 75%. See, external revenue from reportable segments A, B, C, D, and E is 73.75. Just to miss is lesser than 75%. What to do? Management has to identify other segment as reportable segment at its discretion. So FGH is there, no? One of them will become reportable. Which one? Who are we to decide? Let them decide. We'll only tell it is 73.75, it is not 75. You might have to identify another segment as reportable segment. You understand this? Come on, copy this and we are done. 12:59 p.m. Wow, timing. But you guys told you'll sit till 2 o'clock today, no? So I've left with no option but to start with a new unit. Nice. If you finish the table, then copy the conclusion. Did people finish this? How many of you still writing? Quick, 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 quick. Quicker, quicker. Name. Rayan. Rayan is nickname or name is Rayan? I thought name will be Rayansh or something, and then you kept nickname as Rayan. That name is very famous, no? Rayansh. I know. I know. You guys judge the faculty so much that you think faculty is dumb ಅವ್ರಿಗೇನು ಗೊತ್ತೇ ಇಲ್ಲ ಏನು ಅರ್ಥನೇ ಆಗೋದಿಲ್ಲ. Okay, are you guys done? Today's homework, please check September 2025 examinations MCQ question number 1. There is one case scenario given and there are 4 sub questions. Each sub question is for 2 marks. First sub question asset, second sub question revenue, third sub question result, fourth sub question is all the 3 together which segments are reportable. Each MCQ is for 2 marks. 4 MCQs together was for 8 marks in our September 25 exam on our segment reporting. So 2 homeworks for today. One, you will do that September 25 examinations question. And the second thing that you would have to do without fail is you would have to revise Introduction to Accounting Standards. The first unit, whatever discussion was done, you will revise it once before you come to class tomorrow. And I'll tell you what will we do in next class. In tomorrow's class, we will start with applicability of accounting standards. Please sit. I'll take 5 more minutes. We'll start with applicability of accounting standards, which is chapter 3 of our syllabus. Maybe alongside with that, we'll try and do one more counting standard. Is that okay? Yeah. Get your AQ and AS class tomorrow. What books will you get to class tomorrow? AQ and AS. AA book. You can keep it at home. You get it? Don't forget to bring your calculator to class tomorrow and yeah, be present in the class.